And yeah, welcome. It will be a very interesting week, the close of the month, and yeah, just like the title of the of this stream today, it's portfolio rebalancing, and I don't want to talk past that before Jesse says hi. So Jesse, feel free to say hi.
So, hi everyone, welcome back again. It's a start of a new week, a fresh new week, and like Walter said, full of new opportunities. And yeah, we're continuing with our daily series, and today we'll be focusing on portfolio rebalancing. And this is because we are approaching the end of the month, and not just that, we're also approaching the end of quarter two. So it will be interesting to talk about what will happen with the invest on the investment front in terms of the end of quarter two, and that is with regard to portfolio rebalancing. So welcome all of you, and hope you have a great one today. Yeah, so we've got an exciting week ahead. There's plenty to keep us on our toes. So, for example, there's a lot going on from matters, economic data releases, to political events and central bank meetings. That is what is planned for this week. Plus, we are gearing up for the end of the month, like I mentioned, and the end of quarter two, which means that we'll see some interesting portfolio rebalancing flows that can eventually shake up the price action. And let's not forget that we have the aftermath of last Friday's big options expiry and also ETF rebalancing. Now, before I even move on, I haven't personally found a big advantage in aligning my trades with the anticipated portfolio rebalancing flows, but I'll be sure to be looking out for the opportunities which are available to me come that period. But it's also important to keep an eye on this because they can have an impact on equities, the FX market, and also fixed income markets. So sometimes these moves don't line up with the data and news we are seeing. So it's a good idea to be aware of anything that could change our trading environment. So urging you all to stay sharp, stay vigilant, and also wishing you a peaceful week ahead. So, Walter, I don't know if I can just point out a few things that I have on my end before you take over.
Sure, go ahead.
Okay. Um, uh, I just want to repost this. Is it live on Twitter? I want to repost the
Yeah,
stream
sure,
so that
sure. Yeah,
everyone
it
can
is.
be watching. Uh, if you're on Twitter, kindly go to at Top Traders Kenya, at Top Traders Kenya, and you will find uh, the stream. Kindly repost it to your community members so that everyone can get on board and we can move on with today's session. So on top of that, allow me to mention about the competition. It's the last week of the competition. If you're still not aware, we have an active trading competition. It happens each and every month. I think this is the second month. We awarded the winners of last month's competition, with number one getting $500 to the account. The second one got $300, and the third one got $100 credited to the account. So if you're interested in joining the session, just head on to again at Top Traders Kenya. You find all the links there. Kindly just get on board on the competition, and yeah, you could be one of the lucky winners of this month's competition. If not, there's still next month. Yeah, so get on the competition, and yeah, that's what. So for me, yeah, like I said before, we've got some important US data coming off up this week, and you will want to keep an eye out for the big ones. That is the biggest one for me, I guess, will be the US core PCE inflation report, which is coming on Friday, and it has been the Fed's favorite inflation gauge. So that for me will be the highlight of the week. So again, expectations are for an increase that is a 0.1% month over month and an additional 2.6% year over year increase. That is for the US core PCE inflation data. So the last two PCE inflation numbers came in higher than expected, but typically the data aligns with market consensus. So if you get an upside surprise, so let's say on the year over year, we get an inflation print at or above 2.8%, it could be rough for the equity markets, and we might also it can also lead to a strong USD buying. So for you guys who trading the forex pairs, the gold USD, the euro USD, and a higher than expected print of say 2.8 or above could lead to high or strong USD buying. So keep in mind that it can have a significant effect on your trading. So on the flip side, if the month over month inflation comes in 0.00% or even declines lower than that, we could also see a boost in risky assets and some USD selling. So it's good to anticipate such kind of moves and also align your portfolio with that. Aligning a portfolio is a very good point because today we'll be looking at what is portfolio rebalancing, given that this is expected to happen throughout this week because it is the end of the week and also the end of quarter two. Therefore, we can expect some moves or some volatility, given that some funds will be expecting some funds to be rebalancing their portfolios. If you don't know what portfolio rebalancing is, then you're very lucky because today we'll be dealing with what portfolio rebalancing is, looking at very simple examples for us to digest the information on what might be happening at the end of this week and the end of quarter two. So welcome again, everyone who's joined us. And yeah, we hope you're going to get a good one. Walter, before I get into rebalancing, we talked about uh, the politics the political front or the volatility that we might expect out of the politics that is currently going on. We get that in Europe, we already have this volatility being brought in by the elections in France and other European countries. And it has had quite the effect. We saw some huge selling in terms of Euro USD. And right now, I was just looking at the USD chart, and it's at a very interesting point. We are just retesting a very key level that might just bring in some selling. Again, this is not financial advice. We always say that this is for only educational purposes. We are here to watch how we trade, show you guys how we trade. So this does not amount to any kind of investment advice. It's always good to do your due diligence before you get into any financial decisions on an individual level. But for me, the Euro USD, like we talked about, we had a kind of sell off following the political uncertainty in countries such as France. This was way back, if I can remember, yeah, this was way back to June. This was around 7th. We also had some kind of selling after that on the 13th of the month. And we continue having that kind of political environment where there's so much uncertainty in the Eurozone. So for me, yeah, that also comes into play. And before I even go forward, maybe Walter, you can take us through what happens in terms of matters, elections, and the effects, or generally the financial markets, given that we're expecting in preparation for the US elections, we have a kind of debate between the US presidential hopefuls, that is Joe Biden, and the counterpart, who is Donald Trump. And as we get ready for these elections, what things do you expect in terms of how do FX markets react to kind of the election fever and the onset of elections? Walter, kindly take us through that.
Okay, something very funny happens, and it's funny because it is very outspoken whenever any central bank in the central bank independence. Actually, it's central bank independence. It's very outspoken how they should be acting and how they should be relating with the executive of any country. So, uh, in this case, there is a kind of a breach of the central bank independence. So, what do I mean by central bank independence before I go on? Central bank independence means the central bank has its own mandate to make its own decisions according to the data provided according to the economic data which is flowing. Uh, Data like the money supply, the inflation numbers, the all those numbers, employment numbers, they are there to make their own decision independently without being influenced by the political class. But the central bank as well at the same time being the same. I'm sorry, I think it just dropped. Anyway, what I'm saying, uh, at the same time, because we can see, because the central bank acts as a acts as the custodian. Like, let's say the banker is the banker of the government. There is a connection on how money flow is money how money exchanges hands within the government. So what happens during elections is that the reigning president always has some say in the government, where he try in the central bank, where he tries to make the economy look very good. So once that happens, and one of the tools they use a monetary tool which is very easy to tweak, and that is interest rates. So what is happening right now? There is a lot of tightening because of the there's a lot of tightening in the market. Because of the previous inflation which we've been experiencing globally since 2020, brought about by Corona and the COVID-19 and the inflows which enters the market. So what happens right now is that we are just speculating. Yes, we are from FOMC. I think last week, but one we were the FOMC, and it pointed out clearly that we might it is not given that we expect to start cutting rates, especially in the US, unlike the European countries where we can see rate cuts which are that have already started. But right now in the US, everything is still tight. Inflation, it's not yet under the 2%, which the Fed is looking to, which was the target of the Fed. And right now, I think that what they are looking to do, especially towards the election, to is to at least to at least expand the economy kidogo, from the tightening, and at least loosen a bit, so that the stock market can pick up. And if the stock market looks good, the country looks good. So they want to loosen the belt a little, so that, let's say, if it's credit becomes cheaper. It's easy to get loans. And what happens during that time is that the the what do I call it? The the I'm sorry. Anyway, the procedure to get loans, I'm forgetting the name, but there is an economic name to that. But they loosen the belt kidogo, and then people and the businesses can get the loans. So right now, we should be expecting, since elections are coming, and we should certainly be preparing for a rate cut, even if it's not that big. Even a 0.25 or a zero point 0.1 is possible. So that is what I had prepared for you. The central bank independence, and just like just like the our caption says there, it's a portfolio rebalancing stream today, because we are seeing, this is the last day, this is the last week of this quarter, and we expect a portfolio rebalance, where um, the short-term holders. I don't want to say the intraday, because we are like day traders, but short-term holders. Let's say the people who hold stocks and equities for let's say for like a quarter, for like 3 months. They need to go there, look at their books, and relieve whatever is injuring their portfolios, and I think appraise. It's an appraisal and a revision process which goes on. So if something is doing good, they appraise. If it is not good, doing good, it's being reducted. That's why you saw last week we saw BlackRock leave the Kenyan market, the Kenyan browse, and that will be happening. We'll be seeing that, and if if an economy doesn't look good, we can see people leaving, and people by people I am meaning the funds. The funds will leave and yes, they will go to where they see advantage, and that's what happens. And I hope you guys, if you're a long-term trader, let's say for long-term in our trading, on our end, trading, it doesn't mean the swing traders, but this is more of positional traders. So positional traders, this is the right time to be rebalancing and be speculating of what, because the beginning of every quarter we we also welcome the earnings season, and the earnings season in matters stock means it's a peepful season. So it's something very interesting. So that's what we were waiting for. And before I go on, because I think I've done my part on the central bank independence and how it will be affected by the politics of it all. Uh, this week, like I think I posted before a couple of hours ago, uh, it is not that busy. We don't have large cap names, the ones we used to trading, but this week we have Micron. Micron is releasing earnings, and what is up is that Micron is one of the chip names, the semiconductors, and very funny. Everybody wants a piece of Micron right now because it's trading above Friday's close, and it means something. Definitely, that's an indicator. But what is happening across the board? The chip names are down and really down. I think it's a continuation from last week. They have been really suffering, and we can see most of them are trading below the last week's close with almost a percentage. So there is Nvidia trading lower. We can see LAM trading lower. We can see Qualcomm trading low again. Broadcom, I think it's trading almost a bit lower, but around the Friday's close. We can see Supermicro computers doing the same, trading lower. But if you can remember, it is backed by, we can see we can see a good structure where price can is hope there's hope where price can spring back up because there's a good technical setup. We can see TCM. I think TCM again trading lower. We can see AMD as well trading lower. Only Micron is trading up today because it's weak to announce to release earnings. And then here is Intel. Intel as well is trying to cover ground, trading above. But what do we know? What do we expect? Overall, the market is not flat. It's trading low again. The Nasdaq is trading lower, but we can see the Mag sevens at least very strong as per today. Pre-market, we're talking about pre-market. Most of the Mag sevens are trading up, but up or around Friday's close. So there goes Softy. Softy trading around the close of Friday. Tesla as well. Actually, Tesla is trading above, but still around the Friday's close. Amazon, Amazon up there. Meta as well up there. So something is happening, and what we know about the stock market is that the stock market can go down, and we can see Mag sevens performing very different from the market. So we don't know how it will go, but I'm not adding any positions this week. What I'll do, I'll just be managing the ones which are active, and we in total we have 7 positions, uh, two of which of the three, Softy, Tesla, and Amazon, and one in Adobe. So we will be doing that, and as well scouting any other opportunities that is lying around in the market. But right now, we're playing conservative. Why? Because we're ending the month and we're ending the quarter as well. So, yeah, that's the way it goes. Anyway, Jesse, are you
Oh,
here?
nice. Yeah, thank you so much for that. I think it was quite insightful as to regards to how elections play about with the financial markets for that matter. Not forgetting that we just had the ETF rebalancing that was last Friday, and also the options expired last Friday. There was a very big options expiry last Friday. So that happened, and now we wait for the actual rebalancing of portfolios by the end of this month and the end of quarter two. So yeah, and again, we also talked about the politics of the day that is in the US. I think I also touched on the European political situation. I think we have music is too loud. Walter, please, if you can do that and just take care of
Uh,
it.
I'm
Yeah,
sorry.
yeah, yeah, no problem. So okay, oh yeah, like we talked about, I'm expecting the PCE will be quite a highlight of the week, and also we have the debate coming up on Thursday, which will also set the stage and for things to get kind of intense. And we will be watching to see if the debate affects the polls and also the financial markets for that matter. So on to you talked about something else. You said that you're not going to be adding on to positions this end of week, and you will just be managing your current positions, which brings us to today's topic or today's focus, which is portfolio rebalancing. So for anyone who was not here when we were starting, portfolio rebalancing is likely, or sorry, it's certain to happen at the end of this week, or that is the end of quarter two and also the end of the month. And then why is it necessary, and what is it for that matter? So in short, it's very important, especially during times of market volatility, that you take into account that investors, or for that matter, investment funds or invested banks, are going to be rebalancing their portfolios at quarter two. So, what will they be doing, and what is this whole thing called portfolio rebalancing? So it's like giving your investment portfolio a tune-up. That is, you want to trim here and there to make sure that your portfolio remains true to your investment goals and to your investment plan. So this is what happens. Sometimes you might have your original portfolio drawn out. I don't know if I can illustrate. How do people write? Is there like a pen? I've never used the pen tool, so let me try and use that today. Uh-huh. I don't know how that works. Maybe I'll just use a text box to explain what I mean by portfolio rebalancing. So this is the example I want to give. Let me just make my text white. Oh my God. So let me just do away with that. I'm not used to that. So let me put it in prose so that everyone will understand. So let's say you have your portfolio drawn out. So this is what basically happens for investors and investment funds for that matter. You might have a fund where you decide that I'm going to put 50% in equities and maybe 50% in bonds. That is how you want your portfolio to look, or maybe those are the instructions you have been given. And then there comes a time when some of your equities are above, maybe they gain in value because this is investing. Maybe they gain in value and they're no longer 50% of your portfolio. Maybe during the end of quarter two, maybe they're around 70%. So you might want to rebalance that portfolio of yours so that you remain true to your 50-50 allocation for both bonds and equities. So what exactly is rebalancing? So like I said, it's some kind of tuning up your investment portfolio. It means that you sell some assets and you buy others just to keep your target asset allocation on track. So as the market changes, your portfolio can drift away from its original plan. Like I said, the 50-50 plan you had on equities and bonds. So for instance, if your stocks perform really well, they might become a bigger part of your portfolio, while other assets like bonds might shrink in accordance to the allocation that you have on your portfolio. So why is it necessary for investment managers or fund managers to rebalance their portfolios, or investors for that matter? So when your portfolio drifts away from its target allocation, it can either become riskier on one side or more conservative than you actually intended it to be. So this misalignment can affect your potential gains, and that is why rebalancing brings your portfolio back in line with your risk tolerance and also your overall investment strategy. And this also helps you to stay on course for your financial goals. So how does the whole thing work? So it's pretty simple and straightforward. So let's say we are starting, let's have a very theoretical portfolio. Let's form our portfolio today. So let's say we start with a mix of maybe 60% in stocks and 40% in bonds. Again, I hope I had planned for this earlier, so I'll just use the brush. I hope it will be clear. So let's say we want 60%. Dealing with this will be quite problematic, but I'll deal with it. So I want 60% to be like I said, in stocks, that is equities. So I'll just use a letter S for stocks. I hope you'll be following. So I want 60% of my portfolio to be in stocks. And I also want 40% of my portfolio to be in bonds. Or is that tool again? I want 40% of my portfolio to be in bonds. So these are bonds. I'll use the letter B for bonds. I hope you follow up. So stocks is S, and bonds is B. So bonds tends to be some kind of fixed income securities, and stocks are quite volatile in relativity to bonds. So that is what I want my portfolio to be. This is bringing me to a total of 100%, and that means my portfolio will be fully invested in the financial markets according to this plan of mine. So this is my initial plan. I want 60% of my investment to be in stocks and 40% of my investments to be in bonds. So this is the original plan I have. So, and this is a very common allocation. This is for balanced risks and returns, given that I just said that stocks are quite volatile relative to bonds, which are kind of seen as a fixed investment income, fixed income investment for that matter. So again, it's a very common percentage or allocation for in the investment market and used by very many investors. So let's say that your stocks grow. This is we have invested in quarter one, 60% in stocks and 40% in bonds. And by quarter two, by the end of quarter two, our stocks have grown and now make up around 70% of our portfolio. See, this was the original plan. This was invested in quarter one. So as you come into the end of quarter two, I find that my investments in stocks, maybe I had invested some amount in Nvidia. I get that in my percent. Am I clear? Okay. Okay. I kind of lost connection kidogo, but I'm back. So let's say by quarter two, my stocks have grown to around 70%. And
Jesse, are you still with us? Okay, Jesse's down, but I think he's back. Jesse,
shida kidogo ya net, but okay. No worries. Hopefully I can finish without any more hiccups. So yeah, by quarter two, as I was saying, the stocks have grown and they are now worth 70% of my portfolio. So what does this mean? What does this mean? Sorry. Nimepotea tena? Oh, I'm still there. Okay, so what does this mean? my initial portfolio is now imbalanced in that I was intending that I want to hold 60% in stocks and 40% in bonds. But what has happened? By quarter two, my stocks have grown to 70%. So this requires for me to rebalance my portfolio in order for me to keep with my initial plan of holding only 60% in security in stocks or equities and only 40% in bonds, meaning that I have to rebalance my portfolio. So what might I do? I might sell some of the stocks in my portfolio, meaning that I have to sell some equities that I hold. Now that again comes back to individual preference. Which stocks will I want to sell? Maybe the underperforming ones, and also keep the ones that I see that will perform better in future. So that is essentially the concept of portfolio rebalancing. I hope at this point it's clear. If it's not clear, again, Twitters on our individual handles, which are playing right there at the bottom of the stream. And also you can tweet at traders, at Top Traders Kenya, for us to make anything that is not clear more clear for you in terms of what portfolio rebalancing is. So be sure to keep tags, Twitters, and tell us how you want us to look at rebalancing or what is not clear yet. So yeah, that is the whole concept of portfolio rebalancing. Now, like we mentioned before, this is likely to happen at the end of this quarter, that is quarter two, because we have different kinds of portfolio rebalancing, and we look at that in a short while. So let's say, let me just take it back from the top, so that anyone who has missed can get what is happening here, and how this whole thing works. So I'm just going to take another example, not using that 60 and 40%. How do you clear all these things? Forgot.
Okay. A lot has been. Okay, so continue.
Okay,
You
so
had just dropped for a minute, but you're back.
okay. Like I said, mwezi wa mwisho nitakuwa an IT guru somewhere. I'll come for
Man,
an IT certificate. Anyway, so let's look at a more detailed example, so that for anyone out there who's a little bit confused at this point. So imagine you have $10,000 to invest. And for this $10,000 of yours, you want to split them between stocks and bonds. I'm using stocks and bonds because it's very common for investors to divide their capital into stocks and bonds. So you have $10,000 and you want to split them 50-50 between stocks and bonds. So that gives you 5,000 for stocks and 5,000 for bonds. And then you invest these amounts for 1 year. I'm just taking an example for 1 year. So your stocks will be worth, maybe you increase in the 1 year you've invested your capital, your stocks increase to around by 1,000, maybe to 4,000. So that's a loss of 1,000 for the bonds, but your stocks have picked up $2,000 along the way. So your allocation has maybe gone up to around 64% for stocks and 36% for bonds. So you want to rebalance your portfolio so that it still reflects your 50-50 allocation in both stocks and bonds. So in this case, you need to adjust each category so that you will have 5,500 in each. So that means you'll sell some stocks and buy some more bonds. This means that you'll have rebalanced your portfolio to the initial 50-50 split, while keeping your assets still in stocks and bonds. So that is the whole issue of portfolio rebalancing, and this is what we can expect that funds will be doing at the end of this month and the end of quarter two. So again, like I said, there are two types of rebalancing, but two major types, but you can have your own mix in between there. So the first one is calendar-based, like we said, and this one depends on time, on schedule, a regular schedule. Maybe you update your portfolio each and every quarter. You go back to your portfolio and say that for each quarter, I need to rebalance my portfolio to reach my allocation, whether it's 50-50, whether it's 60-40, whichever it is. So at the end of each quarter, you are likely to rebalance your portfolio. So again, it's very simple when you do this on a calendar-based kind of method, where you say that after every quarter, maybe after every year, maybe after every 2 quarters, we need to be rebalancing my portfolio. Again, other different funds have different strategies for how they're going to rebalance their portfolio, but mainly they will use quarters and financial years for that. The other one is trigger-based rebalancing. And trigger-based rebalancing simply means that you see that your portfolio has drifted beyond the set limits, maybe like a 10% change in an asset class. Maybe for the using the same example, stocks and bonds, you set your target at your alerts at 10% change. If your stocks have a 10% change from your initial allocation, therefore you need to rebalance your portfolio at that particular moment. So again, there are advantages and disadvantages of either methods. And for this, I would like everyone to just go do their own research and see what we mean by portfolios will have to be rebalanced at the end of quarter two. And like I said before, even before I started the examples, sometimes price will not be reflecting what is really going on with the news releases, and sometimes we'll see some very awkward movement in the market as portfolios are being rebalanced. Again, don't panic. This will just be a case of portfolios being rebalanced, and because most of these funds are the ones who drive price in the market, and you can expect some random price movements which will not be explained in simple matters. So it's good to keep the community aware that we're going to have this rebalancing at the end of this quarter, which is the end of this week, and therefore expect some random price movements. So in the bottom line is rebalancing is key to managing investment portfolios and also keeping investments aligned with the long-term investment goals. So whether you choose a calendar-based or trigger-based approach when you're doing rebalancing, regular rebalancing helps maintain the desired asset allocation and also keeps risk in check for any investor or investment firm for that matter. And that is the short and the long of it. And this is something we expect by the end of this week, and which is the end of quarter two, and also the end of the month. So what is happening, Walter, on your end? And we revisit this. We revisit the conversation
Definitely.
on portfolio financing. Yeah, we revisit it, and we'll keep highlighting community members on the key points to expect and what opportunities the portfolio rebalancing can have on your trading portfolio or your trading activities. And also, I'll be showing you guys, if like I said, I've not gotten my positioning, how I can take advantage of the rebalancing, but I'll be keeping you up to date when I find opportunities in the market to take advantage of the expected portfolio rebalancing by the end of the week. So, Walter?
Okay. On my end, I have a lot to talk about portfolio rebalancing, but no, not now. We shall revisit, but at the moment we want to prepare for the open, and we have an open, I think, in 19 minutes or less. So let me take the screen back to my end, and let's review what we should be waiting for. And here we go.
And
So
congratulations on getting a house. I hope the cat does not eat it this time round.
who come again?
Congratulations on getting a new mouse, and we hope the cat won't beat.
Wako na mbaya mbaya. Anyway, uh, we're starting from the top, and I want to show you something. Let me just start from the US 30 before we dive to the rest. And this has just happened on US 30, and we can see price is still very, very bullish towards the upper resistance, the one we have marked out here. And yeah, it's the only green index among the US indices. So, like I said, it's unruly. For Dow Jones, it follows some very stable companies, and even if people are leaving their portfolios, because today we'll talk more about portfolios, from the if they are trying to trying to do a revision of their portfolios and trying to sell off the other companies, US 30 companies are slightly safe. So as you can see, price is still very bullish. We can just see price this morning blew another resistance, and now it's just coming back. Who knows? We might see more upward action. So right now on the Nasdaq, we have price coming down. Like a Burj Khalifa, what I like calling it, because you know the Burj Khalifa in Dubai. So just like the tower, and it's no stairs down, it's an escalator down, and price is moving at a fast speed than usual, and we have a setup down, but we are not yet ready to start selling off, because we have a very good triangle trying to push price down. And for the triangle, I've just drawn here the counter trend line, but I would like now to draw the actual triangle and see where price is being, we expect price to sell off to, before we see any consolidation or a reversal if it happens. So that's the continuation setup, and we expect price to be heading towards the higher low, the higher low of what? The higher low of the larger time frame. So when I go back higher, 4 hour is a good one. We see this is the higher low. This is the higher low zone where it also represents the SR, the SR meaning the support and resistance, and this time the support, because yeah, we're going down. So we are likely to test this before we see any price moving in any other direction. But who knows the momentum? The momentum is quite high pre-market. We don't know how it will be reacting towards after the open. So, but right now, everything is pointing to a sell-off, and when the stock market behaves like this, I don't really short the stock market oftenly. If I decide to, I do that only on the index, but I can't risk doing that on individual stocks. Why? Because individual stocks run differently, and we were discussing this before we started the stream with Jesse, and I was telling him. He was actually, we were discussing about PCE, and I was telling Jesse I'm not even that worried, because I know the path stock, the individual stock companies take, it's quite different from what the FX market which we were used to take. So this is what is happening, and we can, if you're doing we can see a lot of rebalancing which is happening right now. Let me use that word. And rebalancing means people are living off their portfolios, and now they want to enter new markets, and new equities, new asset classes, and that's what is happening right now. And especially where you see the countries which have already said that they are lowering the rates. We can see such countries doing, people coming out of the bond market because the bond will be losing value. The yields will be going down because the interest rate is going down, and they are going to other countries. And okay, not other countries per se. They will be moving their money from the bond market to something like the stock market. So I want to talk about that later, because I want to touch on something about risk, and what is the risk between the bond market and the stock market. So moving forward, so we're seeing the price trying to fall down to that support level. But who knows? Is it a must? It comes down here. We don't know. But it's a probability game. It's a wait and see game. So we come and look at the health of our portfolios, and my running trades, and this is what is running on my end. And uh, start with Adobe. Adobe, we marked out this trade, this pattern sometimes last week. I think actually on Thursday and Friday we mapped this out. For the Thursday one was this is how it was looking, and we can see price broke out and came down and formed another setup, and hopefully we were not stopped out. We were almost getting stopped out, but price played well, and we are back up. We are actually seeing price flirting with the counter trend line, and what we hope for a bullish reaction come the open. We hope to see price moving upwards. So that's it for Adobe. And on this other end, here we have Microsoft. Microsoft with the same. Microsoft we had a setup earlier, and this is setup the higher time frame setup, which already broke out, and it broke out I think last week, but no, not really last week, and we're seeing price push up, up and up, and we can see now what we witnessed on the intraday time frames. We saw price consolidating and trying to push up, and a consolidation means another entry and means another opportunity. So here we have another counter trend line, and we can see price tried to move to break it on Friday, and now we can see price. We can hope for price to break it, and what we did towards the end of the on Friday before the close, we had another entry. So my first entry was therefore was from the 4 hour setup, which broke out, and that's an ascending triangle. And now after another consolidation, I make another entry, and that's why I'm saying I'm not even greedy. I don't want to make other positions because we don't know how the market will behave this week, because we had a very slow close come last week. So this is what is happening right now. We can just we can hope price breaks this counter trend line and goes upwards. So apart from that, this is Tesla. Tesla, we have a couple of positions which we're holding, and courtesy of this this continuation of, the continuation of setup, which is a which is a which is a pattern we inside a pattern of this uh, head and shoulder. We can see a head and shoulder here. I've been talking about it for the longest time possible. If any chance I could get, I was yapping about it. I think for the last 2 weeks, and then we can see another triangle which has formed above the breakout, and this is an intraday triangle, and I'm planning to take advantage of it since we have two positions here. I have a position in 177 area, and courtesy of the other on 177, I'm sorry, uh, and another one at 179, and we are hoping to see price going higher, and I have another position which is yet to be triggered at 186, and if that blows, I think we can see the only way is top, and it is what we say, a pattern after a pattern. It means we have conviction on the direction. So we're just hoping price will play ball. But right now, pre-market points on top, and we will go top. So here we are. Amazon had a very good has a very good setup. Right now, what we had a setup on the 4 hour or the higher time frames, where we can see price has a consolidation. If you want to call it a cup and handle, well and good. If you want to call it a triangle, well and good. But what the most important thing, we have a counter trend line which has already broken, which was broken last week, and we have two entries before the breakout and after at the breakout point. So before that, we were looking at Amazon before it broke out, and we marked out two things. We marked out a resistance point where price is currently trading at, and we have our support zone. And if we play over if price pushes above this zone, it means we have an all-time high, and our goal is to go to 200. So two entries for Amazon 2, and yeah, the only way it's top. So that's what I'm looking for, and that's what I'm expecting. And we can go to Meta. Right now, I think we're just perusing through the Mag sevens, and the Mag sevens. And for Meta, we can clearly see a channel here. We can see we have connected the tops and the bottoms, and you can see price playing above Friday's close. And what you can hope for price to break this counter trend line. And this will be quite tempting. I've just said I don't want to make any other positions, but if price if price actions looks very healthy, I think I might consider and play this one. Definitely very conservative. You know me, as compared to my partner here, Jesse. Uh, Jesse is very kind of aggressive as compared to me. I'm a very conservative guy. I only play 0.5 to 1% of my entire portfolio. So, is it sustainable? Yes, for me. For you, I don't know how you do your things, but well and good. I think we can go to Apple, and Apple it does not have any. What I can do, I can remove this count, this the lower trend line, and Apple is just on a free fall after it broke out to the it had a very interesting last week but one where it broke out and went. So we see what we're witnessing right now. We can see price consolidating toward downwards, and I saw somebody say that they expect to see price coming down and test this upper this what we can call the breakout point for the previous flag continuation or the rectangle continuation. So I see people saying that price will retest this and then move forward, but I'm really against that because not against that. I know price can do that, but it's no longer called a retest, but another setup is forming. Why? Because a retest happens almost around immediately the breakout occurs. So what is happening? It's just a retracement where we can see price consolidating after achieving its TP at immediately 2020, like we had hoped for. We had hoped for. So if we see a very bullish week, we might see price starts consolidating from there. So we might see price pushing back up, push back down, and then we see a very good breakout up to the top. So that's not a retest for me. I want to echo that again because I think I'll post it. I'll post where I think I'll post on my TL and retweet the guys who are saying that because they are fin tweet guys, and I think they I know they have more experience than me in the market, but we see what we see and we trade what we see individually. So that's it for me. Uh, we can now see Google playing differently. What Google did, Google broke out and went and left me at the station because my position it was too late to get triggered. And what is happening right now? What happened on Friday? We saw price breakout and went to fruition for a 1 hour setup, this triangle, and because it already reached the TP we had already marked out. What do? We flash our setups. So to avoid confusion and to avoid holding buyers for longer than that. So what we expect either price to we expect price to consolidate, then give us another entry. Without that, we are not in the liberty to play any setup. But on the intraday, we can see another flag forming because I can already see that. I've just spotted that right now. But on the 5 minutes, we can see a very good setup here. I don't play below 15 minutes. Why? Because my entry criteria and my RR criteria don't are is quite different and not healthy on the lower time frame. So this is what I'm seeing here. And if price breaks here, we can see price. I know this one. Jesse might be interested, and we might be seeing price trading above and to 181. So I think that's a dollar. We have a dollar here. We have a dollar trade here. So I think Jesse will be seeing that. Jesse, are you here? Am I alone?
Yep, niko hapa.
Uh, you have a good setup here on Google. Google can give you a dollar if you want to squeeze that in. I don't have an entry criteria here on the lower time frame, so I don't think I'll have a healthy RR. So I know you can play that, but you analyze on your own. Okay, I want to quickly mention about the semiconductors. We've just talked about the Mag Sevens and Adobe, and then I want to talk about the semiconductors, starting with Nvidia and how we expect price to play out. Why? Because we can see very weak. We can see very weak chip names, and hopefully we might be seeing something different come the open. And I don't think it's something long lasting. Uh, I think it's just people taking profit because they have really outperformed the market this quarter. And I think, like we said, the portfolio rebalancing, people are trying to take some profits because that's what they will be judged by, because uh, a lot of firms, apart from the monthly evaluation, they look at the quarterly evaluation of how you've been performing. So individually as a trader and as an institution. So that is what is happening right now, and that's why we can see very weak you can see very weak chip names. And what is happening right now, it's yesterday last week we had a very tight retracement down. But what we expect this week, if the consolidation doesn't persist, we expect price to consolidate to the left, go sideways, and then hopefully break out. If not, we can see a rollover. We can see a lot of we can expect a lot of blood in the streets. So instead of talking about individual tickers in the instead of talking about individual stickers in the semiconductor space, since the price action looks the same across the board, we can talk about anything else. And before the open, because I think there are a few seconds towards the before the bell, we can look at Coinbase, and Coinbase is doing bad because I think the Bitcoin market is the crypto market is not doing well as well. So we can see price trading way below the Friday's close. And we still retain, if you can see, we still retain that counter trend line uh, on the daily time frame, where if we see price break here, this is a very healthy setup. Now moving to a continuation triangle. And if price plays and breaks this counter trend line, it will be very ripe for a reaping. Anyway, I think now seconds too, and the market is open. Yeah, it's open, and we can go intraday and see how the market has opened. And when you can see my right, we can see my portfolio with dancing lights of both red and I'm sorry. We can see my portfolio has dancing lights of both the red and green. So yeah, that's what is happening. And if we can decide to peruse through, we can see Adobe opens down on the in the pre-market. We can see Microsoft opened up, but actually around it opened up, but around the Friday's close, we can see Tesla moving up and up, and I want to enter my position, and I think I'll be giving back to Jesse. Jesse, kindly take over, please.
Oh, I'm loving
Jesse,
Tesla. You remember I have two positions? Yeah, yeah, yeah.
yeah, yeah, okay, okay, sheesh. I don't know if I've been triggered. Uh, Kindly take over. Let me go back to try. Let me put you on.
No problem, no problem. So the
Uh,
dollar is down, open. Gold is spiking up. I'm guessing most people who went at gold at the support level are loving this kind of price action. Good for you. Good for me too, because I had a small position taken right here, somewhere around here at the bottoms, expecting that you're going to see a rebound in price following the huge sell-off that we saw on Friday. So it's good for gold. It's now almost breaking the 4-hour high, still inching up as New York opens. So that's good news for me. And also good news for me is Tesla. Tesla is up 1.5% today on the day on market open. This is again something we talked about last week. We're expecting that once we come and retested this kind of support area, we are going to be bouncing back up, and this is exactly what has been happening. So again, if you were following last week, congratulations, because I know you took this Tesla trade, and if you didn't, well, you might have your reasons. But for me, I went in again I think we had two positions running. We had one that we entered on the day that we saw Elon Musk getting paid, his approval, his payment package approval getting done, and yeah, that's now in the green. We had another one when you came and retested this kind of trend line, and we were expecting good things from this stock name, and this name is not failing us so far. The question remains: can we break this high that we have formed recently at 191? If we can do that, then again we might be looking at higher prices or higher prices for this stock. And our immediate target, you remember, was this kind of expected resistance point at around 201 area. Again, if we can break that high that we formed recently, then we can expect that we might also be coming for the 200 level, and that would be a much welcome move. So Tesla, again, not proving to be a bad name for our portfolio, as we talked about portfolio rebalancing today. So yeah, that's a good name. Again, gold traders out there, I know you're enjoying this moves, seeing gold tick higher and higher. Same to silver, silver traders or commodity traders for that matter. Now we came up to that 4 hour level, rejected it quite. Not as heavy as expected, but we are kind of rejecting that 4 hour high right now. But all indications are that gold is feeling like going green today, and we don't stop in front of gold when it decides to take a certain direction on market open. There we go. We are kind of breaking that 4 hour high, trying to test it, not breaking it yet, but we are testing it and testing it. And the more this gets tested, the more it is likely to break for that matter. Remember that that 4 hour high is kind of a significant zone, given that in the recent past it has been acting as resistance. You can see these 2 points. I don't know if I can be clear enough to show you guys. So we came here, rejected it on the first instance, came here the second time, rejected it on the second instance, came here, kind of rejected it on the third instance, but we finally broke through. That's why we had that kind of bullish stance on gold, which has been wiped off, but we are now coming here for the fourth time. Do we break it, or do we remain below that kind of resistance point, which is, again, as I indicated, quite significant in the price action when you look at the price action, recent price action on this yellow metal. So for anyone who's watching this kind of commodity, expect that there'll be some kind of reaction at this level, given it's quite significant. But if you manage to break through it, then we might be seeing higher movements, given that this kind of structure, this kind of price structure here on the left is quite clear and quite clean. We formed this on Friday, and as we begin this new week, it might be quite instrumental, or might be quite significant if you're breaking out of this current resistance level that we have right here at 23.33. So that is my outlook on gold as the market rallies up. I don't know what is happening on the Nasdaq. I think the Nasdaq, let's just quickly move on to the Nasdaq, see what is going on the overall market. Retaining that kind of bearish outlook for the day, but we are down 0.33% on the day, but market has opened with a green candle, with some bullishness in the market. But remember, it's well below what can be currently viewed as resistance level. This resistance level, again, is between this zone. Let me just mark it out for everyone right here. That is what is acting as a resistance for the moment. So if despite the green, the bullishness that we are witnessing during market open, we are still not pushing through on it. And this is maybe can be an indication that the Nasdaq wants to pull down today. If the Nasdaq is down today, then Nvidia most likely must be down, and it is down 2.5% on the day. Opened up quite bearish on the name. We are back to where we have the 120 level, where we opened after the stock split. If you don't have a short memory, remember that Nvidia just recently had a stock split on their stocks. It's a 10-1, so whatever was 1,200 is now 120, and now we are playing around with those kind of post split levels at 120. So maybe a good chance for anyone who was waiting for a pullback on Nvidia. Maybe we finally have that pullback, but again, the market is the one to answer that question. I am not the one to answer that question, but the only thing I can do is comment and tell you that we are back at that 120 level. And by the way, it is a level that I've been waiting for to see if I can maybe get something on Nvidia. But at the moment, I'll just wait for price action, intraday price action on the lower time frames. I'm currently looking at the 30-minute, so maybe let's see what happens in the next couple of minutes. Remember, this is the first candle after market open, and I don't want to act as of yet because markets can be quite volatile during open, and therefore I'll just wait for things to settle down to see if I can squeeze in a trade, an intraday trade on Nvidia. But for the moment, and the reason I'm looking for a trade today is because we are back to that kind of 120 region. Remember, post split, we were trading at 120. We spiked up on the open during the following day, and we have been quite on a bullish trend since then. But all those gains have been made back. The sellers, once we got to that 140 region, if you were here last week, you remember me singing and singing that I wanted Nvidia to get to 140 level, and luckily for us, it opened on the 18th, it opened at the 140 level. I was able to take 75% of that trade out because that was my level. And since then, we have been on the backside. We have been red since then. And today we just opened green, albeit we had a gap down on Nvidia, showing that it's quite weak on the day. And maybe if we wait long enough, we might be seeing it come back to this kind of 120 region where I'd be very much interested in the name. But for now, that remains the zone of play on market open. This is essentially what I'm looking at. This zone for me is quite significant because this is where we were trading after pre and after the stock split. So this zone is quite interesting. Remember, we've been up on this name. Now we're coming back to that zone, trying to test it. So it will be interesting to see what happens exactly at this kind of zone. So a genuine point of interest for me will be once we get to 120 right here, which was 120 flat. Genuine point of concern will be of interest will be that 120 price. But for now, I really want to see what happens today, given that we gapped down, meaning showing some kind of weakness in the name. So again, very interesting to see what happens in this name today. I don't know what Walter is looking at, but I'm very happy about Tesla. I cannot have enough of Tesla today because it's gapped up right there. I had two entries on the name, both doing quite well on the day, and I really hope that maybe this is the day we break. I don't know what will happen. If the Nasdaq is willing to be generous today, turn green, and maybe Tesla can also turn green on the day. But for now, Tesla is showing all kinds of strength as the chip names, that is the Nvidia and company, proved to be quite weak on the day. So it's maybe the chip names are handing over to Elon Musk's corporations for bullishness. But I can also see that Meta is also high. Walter was talking about Meta before market open, and Meta is up by almost 2% on the day. So a good name to be looking at again today. Meta, Walter, what happened? Have you been triggered into the Meta trade? I know this is the kind of
Not
stuff you
really.
like.
Not really. Okay, what I just remembered I had another entry on had another pending order on Tesla. I think I mentioned that before. And
Yes.
let me take you back to my charts and show you what I'm seeing and what I'm looking at on my end. And quite interesting. I think we're talking about Tesla, and Tesla is up and up and up, and everybody's happy. The world is happy because Tesla is up, and we see another breakout and another breakout towards the 200s. So this is my entry here. I don't think it's that accurate. Let me just try and see what on this end I have. My entry is at 186.87. So I don't know. I don't think it's 186.87. Let me confirm that again. 186.87. If might be different, but coordinates might have a price difference 0.87. And yeah, sure. Now this is my third entry, and being my third entry, I told you the other one was at 177.36. Let me just update this when you guys are here, and 177.36, and That is entry one. My entry two is at 179.4. 179.4, and I'm looking for 200 for the first one, but the other one I think I'm looking at. Uh, I want to see price to rally up to the 220s area. So I don't know because we only have this week, but we can see price moving up, and it's fun. Definitely, when you're green, it's always fun. When you're red, it's something else. So the typical vagaries of the market. So this is the opportunity that lies with this trade, and you can see uh, price pointing towards the 197s. But what we know the earlier and the higher time frame triangle. This triangle points to 200, and instead of the 197s, I can put my out at one at 200 because we have a conviction from the higher time frame. So anyway, everything is all right, and I think the worst performing trade right now on my end is Adobe, and Adobe is down. Not that down on my portfolio, but looking bad, and not yet on the reds because I have a 529 entry, 529 So it's 529.29 on my end, and it's a bit lower. That's my entry, and bado sijafikiwa. Anyway, that's it for me. Price opened lower, still playing around because of the just the it's the first 15 minutes of the day, and we go on. Soft is doing the same. Now trading below my entry, my second entry actually. So what I'll do, I'll just move the counter trend line because that was not a sufficient breakout, and me doing that, it means we have a better setup actually. So I don't know I don't know where we'll have our pivot to spring price back up, but I hope around here we'll have a pivot. So around here, if we have a pivot, either two setups appear. We can either see a good triangle, and if not, we can see a good cup and handle. But what is the most important thing? The counter trend line. So we move above here. We are green on that, but I have a very deep green from the 430. I have a position from the 434 area. So that's it. Uh, I'm sorry, and kindly allow me to yeah, inamaanisha HDMI imeitishwa. Anyway, I'm going Tesla. We've just been talking about Tesla. We can go on about Amazon. Amazon opens up in deep in the resistance zone, and just like I expected, it won't be something. It won't be a walk in the park, breaking the all-time high. So what you can see, price opened up, then back down, but looks very healthy. There are possibilities of breaking that high, and who knows, we might close on an all-time high today. So very hopeful for that. Yes, we go to Meta. Meta, I don't know if I'll be tempted, but I don't think my portfolio is very weighty today. And if you're looking to play this setup, this is a free setup, and uh, when it breaks, let me retract this and then show you well how I expect price to behave. So price is in a channel. You can see that channel, and just like any, I don't want to use the pole estimate. I don't want to use the pole to estimate the where the price target the opportunity, but I'll go inside the setup. Inside the setup, if you see a breakout here, we can possibly see price spring to the 520s, the 519s area. So if you're looking to make a, if I was to trade this out, and if I was to trade this could be my entry. And if I was to play this, I wouldn't be singekuwa greedy because I know how my portfolio is looking right now. And if I was to play this could be my out on the TP side. Then just take a 1:2. 1 is to 2. That's fair. That 1 is to 2.1. But that's how I could have played it. Very conservative, but something. It depends on your position sizing, but something very substantial. So we can hopefully see price breaking there and going up and up. So apart from that, we can go to Meta, and Meta is still struggling to come back up. And being that on the 1 hour, we can see a doji candle, or what we can, I don't know what you guys call it, but these are doji, and it means ET. I don't know what to say about it, but we can see the
Kenyanese.
bears. Kenyanese, I don't know about that. Anyway, Kenyanese. Yeah. Anyway, as long as you know how to read the candle, and as for this candle, we can see the bears won, but at what cost? A huge rejection from the bears. We can see a very, as well. We can see a very. We opened no much volume as compared to the close, but we can see very strong bears who pushed. We can see very strong buyers who pushed bears up today. I'm not speaking on the about Friday, because we can see a very strong bearish close. So hopefully we might see price print higher and higher. So I don't know about that, but let me just talk about Google and then talk about Nasdaq before we dive to other names, because clearly we can see the caps are doing the chips are red, and a serious red. I think the fairest of the reds. I think the only chip name which is up is Micron, like we said, and it was expected. So for Google, we had pointed out this setup, and didn't perform that well, but we saw price print another all-time high, then moved back lower. So it tested there. I don't know if we can call it another block, but it played above that resistance, and we can see price getting rejected lower, but we can also see price now getting rejected by the lows of Friday, and who knows how price. This lows, actually not lows of Friday, but I think it's the lows of Friday actually. This lows, just this lows, but not lows of Friday. So I want to skip the semiconductors, because I think we might waste a lot of time talking about the semiconductors. But we can look at the banking stocks and how they're faring. And for banking stocks, they were doing really poorly last week, especially when I wanted to play that continuational setup. And we can see price trying to come back up, and we can see price potentially making a breakout of this channel. And this is one of the nilikuwa nangojea hii setup sana. Anyway, I really want to. I'm really interested in this breakout, but I think next week when we start another month, I might be playing the banking stocks, the bank stocks. I mean, and the banking sector. Don't know. Anyway, looking for what we can expect. We can expect after, and we can estimate the way I do estimate. We can estimate from the trough low to the trough high, and then we go, and we can see the potential break where around here, and we can see price potentially go the 207s, and above the setups high. Anyway, we go to GS. GS is Goldman Sachs, and still doing the same. Actually, it price broke out briefly last week, earlier, towards the end of the last week. So I think it was on Thursday, and I talked about that, where I had a position in BSC, and I think it's doing really well right now. But we will see that next, and after this peep outside, and potentially, I don't know if you can move the counter trend line, and if it is possible to move this, but I don't think that's healthy. We can see, if we see, wait, let me go back to the hourly, and if we see price breaking here, if we see price breaking here, After breaking the counter trend line, you can be entering after breaking this area. Why? Not that it's a setup, but it's a counter on the lower time frame, which we highlighted last time. So we want to see price comfortably trade above this so that we can have full conviction to trade it. So just like I said, we expect price to we estimate the opportunity from inside the setup, and then we price in price going up and up and up after the breakout. So we expect price to test the line here, and not the line, actually the zone. So the 474, 473 areas. So that's it. I think banking stocks are looking very healthy this day, today, and we can see BSE doing the same. And, BSE, you can remember this setup. I was taken out by it. I think no, I was taken out at break even, if you can remember, and. This was the setup before, and we can see price printed as a point higher than our point A. So we can't use this point A as anything. So what we do, we trash this setup, and potentially see if we can be making another setup for entries. But right now, it means this setup failed, and we cannot call it anything. And what we can just do is just expect price to form another consolidation, give us another entry, then at another entry point, and then decide if I'll play or not. Why? Because it's a mid cap, and it was really stressful playing a mid cap. So I don't want to talk about anything else. I just want to go back to Jesse first. We see what Jesse has been looking at, and then coming back, I think I'll talk about BlackRock and the rest, and then hopefully Jesse will talk about oil, and because I'm looking at XOM, and yeah, Jesse, are you here?
Yep. Yeah, currently, I think we said that gold is going to be reacting some kind of way at this resistance level, and that has come
Okay.
to fruition. We kind of rejected it on the 30 minutes. Yeah, and we continue to play above today's lows. We are positive on gold for the day as we see a weak dollar. Other pairs such as the USD are also up the same level. So I'm guessing all dollar pairs are reacting kind of to a weaker dollar on the day. But that remains, it's Monday, so everything is kind of subdued. And yeah, like looks like today the greens or the bulls are winning. USD is at that particular point I was talking about, the current resistance point, and interesting to see what will happen here. Because we came cruised down that zone, came back, retested it, pulled down. Now we are back at it again for the second time consecutively to see what will happen to this pair today. So, Walter, I would just like to remind everyone that you can like this stream and repost it to the rest of your followers because yeah, that will give us the momentum to keep going because you know that you love our work and we'll continue being here for you each and every day as we move on together in this showing how we take trades. What I just showed you, what is looking at the market. You get to see what I am looking at, and yeah, also tell us what you're also looking at because we're also very interested. And also, if you'd like to join us someday, just give us a holler, and yeah, we'll arrange things for you to come on stream and show us how you trade, show us what you're looking at, and all that. So again, kindly like the post or the stream, maybe repost it to your followers and all that. Just show us some kind of love. So anyway, yeah, that is what I'm looking at. And also a reminder that we have been talking about portfolio rebalancing on the day. And for those of you who just joined, because there's quite a number of you, we're talking about this because this is the last month. Oh, sorry, this is the last month of quarter two, also the last week of quarter two, and also the last week of the month. So portfolio rebalancing becomes quite a very important topic as we look to close this quarter. So we also mentioned before that portfolio rebalancing is basically where investments or investors, that is the funds and everyone in the investment industry, tries to align their goals, the investment goals, with their investment portfolios. So this will be happening at the end of the week, and we can expect some kind of price movements unexplained for that matter. When it comes to the end of the month, that is why we said that although we have PCE and the debate, the elections are the election fever is currently kicking on. It's also important remember that portfolios will be rebalancing at the end of the week. So therefore, PCE and all that data might not react in the way that you expect it to react, maybe in the short term or in the short run. But in the end, what will be moving the markets will be portfolios being rebalanced. Talking of portfolios being rebalanced, where am I looking for opportunities, given that this is the time and period to be looking for opportunities in terms of rebalancing? Now, for me, I will depend on, for me, it will depend on how companies view their portfolios in terms of equities and bonds. Like I mentioned before, the common way that these funds invest their capital is in stocks and bonds. You remember that there's been the whole issue of BlackRock coming into the NSC, Nairobi Stock Exchange. Then all of a sudden last week, I think it was last week, we saw them take a capital flight and they divested from the Nairobi Stock Exchange. So again, those are the sum of the things that we'll be looking at, the movements and outlooks that these companies have. So one way that you can know how these funds, the big ones for that matter, the major ones, will be reacting to the market and how they'll be rebalancing their portfolio, just go to their website, look at their quarter 2 outlook or their quarter 3 outlook. What are they looking to do? Are they looking to increase the exposure to stocks? And if they're looking to increase the exposure to stocks, which are these stocks that they'll be increasing the exposure to? Look at those kind of movements, or what are the expectations, to see where these companies might be looking to buy and where they might be looking to. Well, this will not come in handy for most effects of forex pairs traders, because most of these funds do not kind of give us the kind of insight we like when it comes to forex pairs, because most of the investments, as I said, is mostly tied up in stocks and bonds. So if you are kind of interested in the NASDAQ or in individual names like Walter is taking us through each and every day here, you can maybe look to see where these guys will be positioned. So what is my, because I don't know, we are here to tell you how, to share with you guys how our trading looks like. So what am I looking at in terms of quarter 3? Where do I expect companies will be moving their money to, and where will they be divesting from? So you cannot talk about portfolio rebalancing without talking about interest rates, which have been quite the debate in the recent past. But also, when you remember that like Walter pointed out, the stock market is not so much exposed to interest rates like other markets. So how am I viewing the quarter 3? How will I expect companies to be repositioning themselves in quarter 3?
Excuse.
Okay.
I didn't say they are not as exposed, but
Yes.
they are mildly exposed as compared. Actually, I was not even specific that it is interest rates, but
Okay.
the other data, I think
Oh,
inflation. So kindly don't take me in the wrong context. Anyway, continue.
good.
You can continue.
Good. That is Walter for you. So anyway, what am I looking at in terms of the global financial markets? So we have seen this kind of new obsession. People are trying to time central bank rate cuts. So everywhere you look, people are talking about inflation updates, analyzing central bank statements and such like. So asset prices are highly reactive to any news. We've been talking about a very emotive or emotional market last week. So asset prices, in my view, are highly reactive to any news related to inflation, and we see the spikes in volatility whenever the actual data differs even slightly from expectations. You can remember this on Friday. Friday, we had that spike in prices, an impulse in prices, like we saw in gold, reacting to even the slightest of deviations from expectations. So it's easy to get caught up in the short-term noise, but let's keep in mind that let's keep our focus on the bigger picture. So what am I looking at currently? So last year, when everyone feared an imminent recession, so any positive or resilient economic data was seen as good, was seen as good. That is, it was a good sign. So good news was good news. That is last year. But now with high hopes for interest rate cuts, a strong or improving economy is largely viewed negative. Suddenly, the good news has become bad news. So is this the right way to look at things moving forward? That is quarter two and for the rest of the year. So my perspective is that while interest rates rate cuts will be nice, they have been overhyped, and investors are used to the ultra low interest rates of the 2010s. So to me, it is understandable. But the idea of a rapid rate cutting cycle this year was always a bit unrealistic. So right now, I think most people are pricing in maybe one or the possibility of two rate cuts by end of the year. So again, imagining that there will be a wave or a cycle of rate cuts this year was impractical since the starting of the year. So inflation is returning, the concept of inflation returning to the 2% target is quickly never going to happen smoothly, and recent sticky inflation data confirms this. So if we have a kind of stagflation, means that the smooth landing that everyone has been talking about is slowly not becoming a realization. So what am I saying in long and short? In the middle of all this chatter and volatility, it is always good to remember that you should be focusing on the long term, and short-term fluctuations are just noise, and it is the bigger picture that counts. So it is good to always align your portfolio, align your positions to the long-term goal, because the kind of short-term noise that we're seeing right now is just markets reacting to kind of emotions. We have been seeing very slight deviations from expectations causing big spikes in markets. So it's always good to keep your eye on the ball and focus on the long term rather than the short term. I don't know how that applies to any day trader like we do sometimes here. So on the day trade, for me, I like to rely on my day trading strategy, which of late has not been coming to fruition. So for me right now, I'm positioning myself for the long term. I'm looking at where do I want to see, say, stocks in the future. I just talked about Nvidia. We're coming back to that 120 level. So maybe my long-term outlook is that I want to see Nvidia maybe bounce off that 120 level. Let me just bring that into perspective for anyone who's joining us, because I already talked about it. Yeah. So I like to see Nvidia bounce off that 120 level. Currently, we are playing around with the 123s, but I want to see the key focus for me will be the 120, where we were trading post and pre split. So maybe that is one of the outlooks that I might have on quarter three in the coming year. So basically, if Nvidia is to bounce from that level, what do we expect of markets such as the Nasdaq? I'm expecting that the Nasdaq will also be bouncing, albeit it's a very cautious time for the Nasdaq. And yeah, so maybe I'll be reevaluating what will happen following the imbalances or the portfolio rebalancing at the end of the week. So maybe the most ideal moment for me to be trading anything will be on Monday, coming Monday going forward, because that is where we will have gotten rid of all this uncertainty with the rebalancing and all. So next week is a very good point for us to be taking positions, that is long-term positions. And guess what? That will be after the close of the monthly competition. A very good chance for everyone to be taking their new positions coming in the coming month. So again, it realigns with a very good timing after rebalances. So again, if you're not joined the competition, you can always do so. Go to our individual handles, go to the at Top Traders Kenya, and you'll be finding the links to the competition. If there are no links, you can DM me personally. I will personally send you all the links. And yeah, we can also have a small chat on the side that is far from the stream. So that is what I am looking at. So if you want to see how maybe you're exposed to some of these funds, Walter was just talking about BlackRock. And if I can just share the screen of what BlackRock expects in the coming month, let me just do that quickly, so that you have an idea of how I get my information on how companies will be positioned in quarter three. So this is just like to share something I'm reading from their website, and this is to show you how they'll be positioned in the coming quarter. So if it is, Walter, just confirm if it, I think it's clear on
Yeah,
the stream.
quite clear.
Yeah. Yeah, so this is what they mean, taking the investment wheel, and you will see why rebalancing is a very big subject today. because they'll be showing you how important it is for them and what they'll be doing. So there's a lot of information if you go to their website, and they'll be analyzing what they'll be looking at in quarter two, and what they'll be expecting in quarter three. But this is the most important bit, and this is how you can get information on how some of these companies will be positioned in quarter three. So this is, again, I'm quoting just from the website, expectations for S&P 500 earnings growth for 2024 have been revised up, meaning they have a better outlook for the S&P, and they're looking for higher prices, with tech sector expected to account for half of this year's S&P 500 earnings. So we went, this is again BlackRock. So we went tactically overweight US stocks in January 2024. So this to me tells me that they were very heavily invested in US stocks beginning of the year, still leaning into the AI or theme. We think upbeat risk appetite can broaden out beyond tech as more sectors adopt AI and as market confidence is buoyed by recent Fed messaging and falling inflation. We up our overweight to Japan, solid corporate earnings and a recovery in wages and inflation after decades of sluggish progress has brightened the backdrop of Japan stocks. We think the BOJ monetary policy stance is supportive of Japan's markets. This tells you that they're upbeat about the growth of the current about the current situation in the Japanese stocks, and they are looking to link up their exposure in these stocks. So this is one of the indicators that BlackRock, as a corporation, will be looking into Japanese stocks. So strategically, we stay selective in fixed income. Remember, I said that most of these funds are mostly invested in stocks, a mixture of stocks and bonds. So when it comes to fixed income, this is what I'm talking about, bonds. So in February 2024, we trimmed our maximum overweight to inflation-linked bonds, yet our expectation for inflation to settle at a higher than markets expect keep us overweight. We still like income within private markets. Within developed markets, that is the DM, government bonds, we keep a preference for short-term maturities. We believe investors will benefit from a more active approach to their portfolios. Listen to this. We believe investors will benefit from a more active approach to their portfolios. What does that imply? That you should be looking to also adjust your portfolios actively. This is not a time to switch on the investment autopilot. It's a time to take control. It's important to be deliberate in taking portfolio risk in our view. That is the view of the BlackRock. So what does this mean? They will be heavily rebalancing their portfolio at the end of quarter two. This is where portfolio rebalancing becomes an important topic, especially for this week. So again, check out these companies' websites, and you will see what they are looking at for quarter three. And also, you can also get an idea of how you can also position yourself or your trades in the coming week, given that they are actively rebalancing their portfolios this week. So I hope that has been insightful. As always, be kind enough to share this and like this stream to the rest of your people so that they can also get the same kind of value. So again, Walter, and yeah, that is my outlook on rebalancing and how I expect things to be playing out. So, like just a snapshot of what I said. Although interest rates has been a very of a great debate, I think it's time that you look at the equities for those of you who trade equities to see which ones have been performing better, to see which ones, which sectors, funds and investors are most likely going to go into coming in the coming week. And also remember that I'm also very much invested in Nvidia at this level, not just Nvidia but in the chip names, because I think that AI names are going to continue their foothold in the market this for the rest of the year. And this is why I'm looking for positions, like I said, in the likes of Nvidia, in the likes of this name right here, which is in Qualcomm, in micro technologies and all that. So very important again to see what might be happening in the coming week. So that is it for my rebalancing. I don't know what Walter is looking at the end, or maybe you have comments, Walter, on what I just talked about.
I have a lot of comments about rebalancing because I just like I told you, I've done an 8-page paper earlier this year, so
Okay.
about it, and I think najipata off guard because all the time you've talked too much, and I think it's better the guys to see the charts a little, Then I
Yes.
dive to the rebalancing because
Yes.
I don't want to bore guys. They need to see some action of how price is doing its things.
Great.
So
Okay.
let's go check on the health of what is happening right now. We can see some recovery on the Nasdaq, and just like we said before, price is not given to be going to these lows. Why? Because overall on the higher time frame, we are looking at a very bullish market, and like we expected, this is just a consolidation of where prices of where guys are giving back gains by taking profits, not really giving back gains. I said and I quoted it like they are taking profit before the end of the month. So the end of the month, which coincides with the end of the quarter. So this is what is happening right now, and on on the hourly, we can see price just printed a week, and that's a fake out according to classicals, and that means price has rejected those laws, and it is not given this setup is not given to go to fruition. So what do you do in such a case? You trash the setup and try and look at price in another direction. So what can qualify for a bullish setup? If we see a break of these highs, it means we can have now something we were taught just the other day, a change of character. Anyway, uh, going forward, I'm hoping to see price getting bullish and bullish before towards the close, but we can talk about the very bullish US 30. US 30 is on steroids and still going to approach the upward resistance. We can see the US 500, which almost mirrors the Nasdaq, and it is doing pretty nice. And yeah, it is now consolidating the way I wanted to see price consolidate. And by consolidation, what I mean, I want to see price do this and this dance and then a breakout. So if we are fortunate enough to have this, we can have a good counter trend line and be able to play later in the week, later in the month, or next month. So moving forward, I can see we have Adobe uh, price action is pretty good. We can see price still trying to go up and break uh, break the today's highs and last print, and yeah, doing good. A very healthy setup and price action. So we can see here, we can see this is Microsoft, and Softy, what Softy has done, it opened, then went lower, printing what we can call cup and handle on my end. And if you want to call it any other thing, but what we remember, you remember the most important thing of the most important, you can call this. You can call it any way you want, but this looks like a very good continuational setup. Why? Because we have a counter trend line. So that's another continuation after another continuation. So what we expect price to test the 457s, the 457s area. Why? Because that the in the short run, this is the short term where we expect price to go to 457s. Then on the overall, we expect price to push back up to the 470s. So next, I think we have Tesla, and very good actually. What I've just failed to mention, that price broke out of the setup, and breaking out of the setup, we expect higher and higher price action. So the stock market is doing good, nothing to complain about. I think Tesla has given back some gains, and now it's trading inside. It's trading back inside the setup, but still very healthy, still green for the day, above a percentage. So still doing good. So we can't complain, and just going to the next setup, and the next ticker, and the next ticker is Amazon, doing pretty well. From the 15 minutes, from the previous 15 minutes, just printed the high of the day. So we expect beating another high of the day before the close, uh, before another high of the day before the opening print. So we expect price to go much higher because it means bulls are here and they are here to stay. So we can see Meta has not yet broken out, but very hopeful. We can see. Apart from that rejection, I don't think Meta will be doing bad today. And since the stock market is overall really trying to get green today, maybe we can see some more bullish prints. So you can remember it's a channel, and what I want to talk about Apple. It's just a quick brush through whatever the Mag 7, and then we look at anything else. And just like we said, just like we called, I can't remember the name. The name Jesse called this candle, but mine is a doji kituka hiyo. But we can see a rejection, and I told you we can see some bulls in the details, and you can see price going back up. I don't want to talk about anything else because I told you we will have to look at how BlackRock is playing around, and the BlackRock is doing very good, and doing very good. We are almost at breakout. Almost at breakout. If you can remember this setup, and I told you I've been mentioning about this setup, and I was waiting since this consolidation down here. So we expect a lot of bullish price action if BlackRock breaks that trend line. We break this trend line, and this is just an estimate. I'm sorry, I'm used to doing that. And after price breaks this counter trend line, we can see price moving much higher. So apart from that, I think I don't want to mention. No. I have. I don't think. I can't remember Jesse mentioning about oil, but I think oil is doing good today. I'll just mention something about it, and this is what I can see on the Exxon side of things, and Exxon is performing really well today, and we can see some bullish price action. If I can check on what oil is doing right now, and oil is still printing some greens. So as expected, we can see some bullish price action today. So apart from Exxon, I wanted to talk about Palantir. Palantir, something very funny has happened, and this is what has happened, and we can see a retest on the higher time frame. You can see a retest on the higher time frame, of which price we had a dummy entry here, and a dummy entry was to go to 28. So what happened? What happened for us to go to? What happened for us to relieve this price? I told you if price gets to the halfway my opportunity, I break even my trades. So I break even and price comes back down. So when price comes back down, for safety purposes, I break even. Okay. Yeah, I get my position closes at break even. Now we can see price trying to move much higher. So what is the re-entry criteria on this? So you have two options. You have two options. One, trash the setup. Let me do that. Trash the setup. Trash the setup completely. Trash everything. Then come print out something else. So this is a new counter trend line, as you can see. That's a new one. So what are we expecting now? Either we expect another point D, if you can call this point A, B, the lowest here, C, and then D. Then we expect price to push much higher than the 28. So it's just like a better entry and a much larger a much larger opportunity. If price comes beating here, beating this counter trend line, we can expect price to spring much higher to the 32s. So that's another thing. So something to watch for. You don't really have to buy immediately. What you can also do on the lower time frame, because now we have another. We can just put another line here so that we can know where we expect price to rally to after our breakout. On the lower time frame, precisely an hour, I think I'd love it to see a consolidation and a discount entry on the hourly. So I expect price to print something like this. We can see price go there, we can see there, and then we can see somewhat of a consolidation before a double breakout. So a double breakout means we can see price breakout from the inside setup, and then this price will be a discount entry to another breakout on the larger time frame. So that is what I'm expecting, and yeah, I think it's one of the virtues of traders to just wait, and that's what we'll do. We'll just wait to see how price action plays out, and but I'm very hopeful that we'll see higher and higher points on the Palantir side of things. So I want to speak about risk management, and there are two asset classes we are talking about today, and especially on the portfolios. And most of the portfolios of investors, there are two things, and most of them have stocks and bonds. Why? Bonds, in a class setup, we call bonds as the risk-free assets. Why? The Apart from the recent times where we saw, I think it's Ghana and Sri Lanka defaulting on the bonds, it is known that it is known that the bond is the only instrument where where the risk of defaulting is very low. So when we're doing our calculations in applied investments, we were classifying bonds as the risk-free assets. So you'll find most of these big firms, they weight bonds over like 10%. 10% they hold bonds. And what is happening right now, and it's very crucial right now, where we can see uh, we can see governments want to cut rates, and cutting of rates means one thing. It means that the yield is going down, and people should find other means of investment. And this means that the government does no longer want your money, and you can take your money and invest in a better performing asset class. So that brings inflow in the commodities sector, not really the commodities, but directly we can see an inflow in the stock market, the equities market, and if there I in commodities, a lot of inflow comes when there is uncertainty. But on this at this time, we can also see inflows from the from the bond market, and that's the flow of the market, and that's how the interest rate affect the market. And on this other side, on the equities side of things, I think we can see we will be seeing some inflow, just like I think just has just read there, and they say that that the Japanese stock market looks very lovely right now. Why? Because the uncertainty uh, in the U.S. markets, and we know the Japanese investors are one of the biggest holders of the U.S. government papers, and since the conversation about rate cuts has started, they want to diversify and at least relieve their and reduce the exposure on the U.S. bonds, and uh, it looks very favorable for the equities back at home, and now the BlackRock wants to take advantage of that. So I can see Tesla is doing really bad, and I'm sorry for that. For that, I was just watching the ticker going, but that's what I mean, and what we call that a revision, and a revision is something very good and very healthy. because when we are doing something called the security analysis, which is done before the portfolio construction, you are being guided by something called the investment process, where you look at the economy, you look at the industry or the sector where you want to invest, and then you look at the specific companies. In this case, if you're going the stock market way, so uh, when doing that revision, it comes with how the, the portfolio was weighted and how it performed. And look into other things. You can look to either appraise the ones that are doing good, because I've seen them talking about the tech stocks which have been performing exemplarily this year, and you can see the exposure, maybe it will be going up. And maybe take because they are actively managing their portfolio, maybe take some gains from that, and then diversify to other things, or appraise the stock. I appraise the cheap names. So that's what I mean. And I want to take this back to Jesse to talk a bit about the technicals, because today has been very theoretical and we want to see some action from his side. So, Jesse, are you here?
Yep. Is
Uh,
my
can,
shared?
yes, we can now see.
All
Okay,
right, all right.
continue.
Okay, yeah. So nothing much on the side of gold. Just rejecting that level that we talked about, which was expected. Again, it's Monday, so again, I was not expecting a lot of momentum to push us over that kind of resistance. So we're just currently just playing around, in and around that resistance zone. But here's something interesting. Look at the, if I can map this out. We came here on Friday, made this bottom, but from then we just been making higher highs and higher lows, higher highs and higher lows. Every time we come back down, we're kind of getting that push up, we're kind of getting that push up and breaking the highs. So for me, as the week starts, I'm seeing some kind of continuation of the bullishness that we have been seeing in the yellow metal recently. And if you have been on these streams, I've been very categorical that if you're not breaking 2300, then I expect that we'll be remaining in above that support zone and probably headed towards the all-time highs. So on, I love oil, and you love it when I talk about oil. So this is what I'm looking at in this market when it comes to oil. For that matter, remember that we had this bounce off the 80 area, and again, it was very healthy. Bounce off the 80 area was what we were expecting, given that once we broke out of it, we had never touched it again. We only came to about 81 and then pulled up. So I was waiting for proper retest of the 8 area, which has happened. And now we can say that there is a clear rejection of that support zone, resistance stand support. This is a very welcome movement for me. I like it when price kind of breaks out of resistance and then comes and creates the former resistance as support, which is a very healthy price action in my view. So right now we're interacting with our current break highs, the current break levels, that is the break after the 80s level, and you're currently interacting with 82. So for me, I'm not going to take any additional positions in oil. I had already taken one at the retest of 80 level. I had indicated this before that once we retested 80, I was going to take another position. So I added on to my existing oil position, and now I'm not going to add on anything until you can break out of 82, headed for the current targets, which I stated were at. I think it's better on the daily, yeah, there. So current targets for me are from 84 towards 88 area. So that is where I'll be looking, to maybe have my targets. But for the immediate one, it's at 84. Probably 80, the latest, the 83.5 towards 84. That is where I'll be looking to kind of take profits and all that. So again, we have not yet broken out of this consolidation on the daily. Just look at that. This range for me, I think I already have it marked out. This is a range where we have to make a decision. This is where oil will make their decision. So for now, we just came back, retested it today, that 80 level, and now we are pushing higher. And if we can break out of that 81 to 82 level, then I'm guessing that the next topic, all signs will be clear that we'll be coming to clear all this out, to finally reach what will be now considered resistance at 84, and that is where I'll be looking to take my position and to take profits on my position. But if you're here, you know that I am actively managing my trades, and therefore you'll be expecting that I'll be taking some profits once we approach this 82.5 area, because I already have a position which I took at the 80 level. So for me, $2 towards $3 is not bad for my portfolio, and therefore I'll be looking to take some here and then take some profit here, and then I will let the rest come up to the 84 level. In other areas, we're also seeing a drop in BTC, meaning Coinbase should also be down on the day. Yeah. Sorry for that. Just looking at something here. Okay, so Bitcoin is down on the day, but crucially, we are hanging above this kind of zone here, which can be a make or break zone right there. That zone is a make or break. So right now we just had a touch and go, touched it slightly, rejecting it, which was expected, because this zone is a make or break. If you're breaking below here, then I'm expecting that Bitcoin maybe really wants to test that 52,000 zone, which I know Marxists would not like me to be saying, but charts are charts and price is action. Price is price. We don't argue price. We only follow what price wants to show us, and we only react to what price wants to do. Yeah. So that is it for matters cryptocurrency. I don't have any exposure in cryptocurrency at the moment. Looking at Coinbase, I maybe want to take Coinbase on once Bitcoin shows me signs of strength above this current support zone. If it shows me weakness on this kind of support zone, then I'll not be taking any trades, because the moment I don't like to be shorting any names. I don't like, especially crypto names. I don't like to be shorting crypto names, especially when Bitcoin has shown us resilience this year. So this is one of the names. This is one of the sectors I want to keep off in Q3. I want to keep off any shorts in crypto names, especially when it comes to the stock market. That is Coinbase, Mara, and the other related names when it comes to the Nasdaq names. But generally, I want more exposure in AI, and that is why I'm looking at Micron for maybe an exposure. And also, I am also looking at other chip names as which is this Qualcomm, yeah, Qualcomm and the rest. So again, Micron, we are looking for it at this level at 130-ish, at 130, 131, but it's not yet there. But we are seeing some kind of bearish movement today, and maybe it's time that Micron just comes to a level so that we can take it even higher. Same on the other chip name, which is NVIDIA. We really want it to come down, show us some kind of position. It's already there, by the way. It's at 121. I said that I'm looking to see what happens at 120. Right now, we came to 121.05. In fact, we touched 120 and bounced back. So maybe this is again an interesting level for me. Maybe looking to expose myself in the chip names. But I wish this will have happened next week or next Monday, because that is exactly when I want to take the chunk of my swing positions in AI, in chip names, and in the general in tech names, because I expect them to carry the day for the rest of the year. So for now, just watching what happens in and around this zone. Like Walter mentioned, patience is a virtue when it comes to navigating these markets. So therefore, I'll have my patience, see where we close out today, see what happens today, and in the coming week, most likely make my final decision in the coming week. So maybe for now, I'm expecting quite some reaction to this 120, because as I said, it's quite an interesting level, quite a point of interest. But for now, maybe a larger pullback towards 112 or so, maybe a larger pullback towards this kind of, for a deeper retracement before we can finally decide that we want to take the chip names higher and higher this year, and maybe look again towards the 140 region as target. For now, we continue watching what happens to the chip names in and around this area. Most of them are at key positions, and maybe it will be interesting if tech is is geared up to take the rest of the year, or to continue showing us that it is here to stay and it is here to stick out in the general market or in the US economy and all that, in the equities market, then cheap names will be likely a good target for funds and investors as we head on to the post rebalancing of quarter two and as we head on to quarter three. So it will be interesting to see what we see during these levels, the 131 and 132. I am a resistance and support kind of trader. Walter is a kind of patterns trader. So he's been showing a lot of patterns, and I will be showing a lot of zones, that is when it comes to support and resistance. So therefore, why or the dollar, for that matter, for guys who trade the majors and all that. Yes, we are currently down of 5 region. Just zooming this out towards the daily so that we can really have a look at what that is showing us. Remember, the channel on the daily for the DXY, we broke out on Friday. Right now, showing weakness, but still crucial, having some kind of flat region, which is acting as current support. So for me, again, although the dollar has shown some kind of weakness today, we might be expecting that this dollar is maybe headed for higher, and we might expect to see this kind of motion. I don't know where my tools went to, but generally, we are expecting that the dollar might bounce back to maybe come and test these areas of 106 region. Still holding above support, but the dollar might be coming up to test the 106 region.
Jesse, you just dropped off again.
It's just one of those, the market does not move in a straight line. It moves up, down in a zigzag kind of formation. And this is probably what we are seeing here. And we can expect that the current strength of the dollar will continue to show its hand in the market. And therefore, if you're trading the majors, that's a very good indicator that of where market might be heading towards. Talking of the dollar, we can also not forget about the Euro USD, which today is 0.4 up on the day. But for me, I still have that long-term bearish outlook on the Euro USD. Like I mentioned before, for me, it's not about playing the short-term game. For me, it's about having your eyes fixated on the long-term game. And for me, the long-term game on the Euro USD is a bearish outlook. Again, I'm looking at this level. Sorry, just to start things off, we are currently in a bearish channel on the daily level. We came up to this, what Walter calls the counter trend line, and then inched lower, courtesy of the instability in the Eurozone. But now today we just jumped up again on account of a weak dollar, just tested our resistance point, and you know what? We rejected it in some kind of heavy way, and now I'm looking for this kind of motion on USD. I'm looking for a continuation of the downward kind of motion on Euro USD to maybe come down. If we are going to test these current lows right here and break through them, then my most immediate target will be that 1.06 region, and therefore, and then maybe we come and retest this breakout, and then we might be headed even lower on the Euro USD, because for now, for me, the Euro looks quite weak, and therefore, as the dollar tries to inch upwards, I'm expecting that we'll see some kind of weakness and outright weakness in the USD in the long term. So my long-term positioning on the USD is bearish, and I'm looking for the Euro USD to come and maybe test number one, this 106 region, and then maybe even an inch, even much lower than that. So that is my outlook on the Euro USD. We talked about the Russell last week. Right now, it's headed to be around 1%, and look at that. It's broken our daily channel, although our daily channel is formed on candle closure, not wicks. If you're talking about wicks, then we are yet to test the upper trend line. Well, the reason I was going for candle closure is this kind of pattern. Look at this. I was looking at candle closures in such kind of way that they were so much compact. That is why I chose to go with candle closure for my daily channel. But if the weeks are anything to go by, we are yet to get to the weeks. But as long as candle closure goes, we have broken that kind of channel that we are currently playing with, and yeah, maybe an indication that the Russell wants to go up. But for me, if the economy it continues, or the data, the incoming data continue to show the kind of stagflation that we're having with the maintenance of high interest rates, I believe that will be very detrimental to small cap names which are very cash dependent, and therefore I'm expecting in the long term that the Russell is coming to test this established support at around 1948 or so, and therefore my long-term outlook on the Russell is very bearish for the moment until anything springs up or anything changes. But with the current economic situation of high interest rates, remember, small caps depend on cash, and cash, they have to borrow cash. And if they're borrowing cash at a very high interest rate, then that does not is not very favorable on their incomes, on their operating cycles, and therefore I'm expecting that even as we move into quarter three, that these companies will continue being compressed or maybe being hindered by the high cost of borrowing, and therefore their overall output or their incomes as we head into earnings report for quarter three will be highly impacted by high interest rates, and therefore for the Russell, I expect that kind of motion towards the downside. So I'm looking for bearish entries on the Russell, but I said I'm very cautious for the week. So maybe make an informed decision once the imbalances are put out and we have rebalancing come next week. So yeah, that is it. Another commodity, moving on to commodities again, is silver. So silver for me let me just analyze it. Let me just draw fresh lines on silver, or fresh zones on silver. So we have been trading largely in between 28 and 20 region. We came and broke out. This was around 15th May, and then formed this high at 32. Formed this kind of high at 32. So, and then after forming the high, we rejected it for the first time, came for the second time, did not quite break, and therefore we had to move down towards again our established support right here at 28.9. So what are we seeing right now in terms of price action is that price has kind of rejected this. You can watch for this kind of rejection candles. Here we had the first one, second kind of rejection candle, and the third rejection candle here. So what does that tell me? Silver, for the meantime or in the short term, kind of wants to stick above that 28 level that we broke out of, and maybe inch higher. But there's something else that you should be watching out. I have not analyzed the commitment of traders as released on Friday to see where retailers or commercial and non-commercial players are positioned, especially on silver. But ideally, I would like to be placed where the retailers are in the opposite direction of retail traders. So where the retail traders are positioned, I want to be on the opposite of that. Keeping that in mind, I'm also looking at this. If I could quickly have a trend line to show you how bullish silver is, look at that. Silver has been on the uptick ever since the beginning of the year. We have been inching ever higher and higher. So what does that tell me? And look at that. We are currently rejecting that kind of trend line that we have been seeing throughout the year. So for me, silver again is a very bullish outlook. But technically, without looking at complicating the trade too much, this kind of action I want to see. Right now, we came here, retested that trend line after we inched up right here on Thursday, came back down on Friday, retested this lower trend line, and now we are kind of seeing that motion towards the upside. So I'm expecting a kind of motion towards these areas, followed by a rejection, a slight rejection of that, and then maybe if silver wants to go bullish, then we'll be continuing with the bullish outlook towards the all-time high. The highs that we've been formed, the yearly highs at 32 level. And following that, maybe we'd see how if market really wants to create new highs of the year, or maybe we just want to play in this kind of consolidation area here. But it is highly unlikely that we keep in this kind of in a range for a very long time, because eventually it's going to break. We came to this high, from the high, came and tested the high again, rejected it. We have rejected the kind of support that we've been seeing here. And therefore, if we don't want to go lower, then we most definitely want to go higher. And for me, I want to see silver even inch higher than this. Today, I've not taken a trade. Remember, we had a trade last week. We closed partials at this area, because at the 4 hour, that is where we had our rejection, our resistance zone. Yeah, this 4 hour rejection resistance zone. We took profits at that zone, and then we moved our stops into break even. It came and stopped us out right here. I think this week is what laid the nail on the coffin for us. So we came and we got stopped out by this week. So right now I'm not into any new trades on silver, and I'll be updating everyone once I get a new entry on silver. And yeah, so for that, that is my current outlook on silver. So I've talked about oil, I've talked about gold, I've talked about the Nasdaq, the Russell, and silver, which form the highest point of my portfolio. My portfolio is majorly focused on those 5 names. So again, yeah, for Walter, I think he has a big array for now. And in terms of stocks, also I'm exposed to stocks. Obviously, we have our current running trade on Tesla, still currently holding support. So again, still positive on the name, although on the day we came up here, rejected, of course. It was expected, because that is our current high that we have formed recently. So we have rejected that, but significantly still keeping above our support zone, which is around at 180. If anything goes and 180 breaks, then I'll be changing my conviction on Tesla and maybe closing the trade, expecting that prices might, come lower towards maybe 169 or so. But for now, still positive on the name, still having a better outlook for the year when it comes to Tesla. Walter?
Okay, a lot has been happening while you're talking, and the market just flashing. But what I can call, we can see a lot of volatility today, and I'm just here. This is my Amazon, and it's really playing around. And I don't want to talk about Amazon before I talk about the Nasdaq, where price now wants to go to the lows and wants to test that support if it wants to test or if it wants to run through it. So what we can see a lot of volatility, price going up and down, and we saw a very aggressive buying after the bell, and then now we can see a very aggressive sell off, and definitely courtesy of the chip names, and the chip names like Nvidia is 6.2 down, and it's the most red nishaiona Nvidia. Anyway, going forward, I think we might see some resist, some support. Don't know, but this is how the others are looking, and definitely the unruly one, the US 30 is printing a 1%, and it doesn't care whatever the other market is doing, and that's why it was at one point towards the end of last year. It was the only index I was trading. So I really like how it plays out, but the fact that you cannot correlate it with any other market, it becomes very hard. So what I used to do when I was playing the Dow Jones, I used I used to correlate it with the with specific with specific stocks that make up the US 30. So I had a watch list of US 30 stocks. That's what tripped me into trading stocks only, because I saw that's where the interest of trading stocks only started. So yeah, that's what is happening. And let me first talk about Adobe. Adobe is still very healthy, trading above the entry. So nothing much to worry about. Very healthy trade. We can see. Microsoft trading above both entries, looking bad after the flash, but still looking very strong for the day, and nothing much to worry about. If price goes lower, we might start getting worried. But so far so good. I can see Tesla. Tesla's moved down and down and down. And at this point, at the risk of being stopped out after my entry in the morning, not in the morning like after the bell, but in the morning there, definitely the US. So just it has just ran through the opening up, and we can see it testing the Friday's close. But if you can see price coming back up, just idea. Anyway, nothing much to worry about there because it's only a 0.5%. So we can go to Amazon. Amazon is doing bad. It has just broken down inside my entry, and pattern wise it is back inside the setup, so qualifies as a retest, as a counter trend retest. But what do we know? Will we see the market going lower? Don't know. But what we can see right now on the higher time frame, we can see price testing the resistance zone. So hopefully price will be going back up. Hopefully price will be going back up, and nothing much to worry about. I don't want to stress about it because everything was calculated, and yeah, if we have to get out, we have to get out at once. So I think I'll talk about the reds. We want to see the NVIDIA. We want to see NVIDIA bleeding, and NVIDIA is seriously bleeding, and seriously bleeding. I think this is what Jesse wanted to see. He wanted to see price action go lower, and true to his word, and we can see price going lower. But it has first to test the support and test it well. Not really support, and this zone here. So I think better to watch how it plays around here, and yeah, it might be supported up the gap up here. So a gap up here. So yeah, let's wait and see. But the stock market's turned red, and we can see the banking stocks playing higher, potentially breaking out, and flirting with the counter trend line. GS the same. You can see GS trading above the counter trend line of the channel, and unable to break the high of the high after the fake out last time. So something to watch and see. And I just want to go back up and look at the health of my the health
Walter,
of my trades.
can I just
Yeah,
jump in just a minute?
can
This is something I've thought
you
of.
do so?
Yeah, this is something I've thought of. Now we are currently
Okay.
seeing some selling in the market, which is obvious given the prices that we are currently seeing today. Now, do you think, and going back to the discussion of portfolio rebalancing, do you think we might be seeing selling or buying being the theme this week when it comes to the stock market? Because for me, and I'll go fast, because if it is a matter of rebalancing, right? If anyone is going to be
Yeah.
buying anything, it's going to be buying after they have rebalanced. That is after next. That is the end of the quarter, maybe in the start or maybe in the middle of the next month. That is when any buying will be considered. But for the meantime, I think what should be considered for this week is continued selling, because if anyone is going to rebalance or get rid of some shares and all that, they might be doing that this week. So I guess the theme for the week will be a lot of selling in the market, because if it is buying, the buying will be likely be seen when quarter three starts, or maybe if someone wants to increase the exposure in companies like Nvidia and AI and all that, they might be doing that in the coming month, or in the middle of the coming month, or in the middle of quarter three. You never know. So for me, I think what will be the theme this week will be a lot of selling in the market. So maybe it's something we can discuss and maybe think about.
On the contrary, I think okay. It's this. Remember, the analysis doesn't always happen after. it is during and continuing. So the thought of rebalancing starts actually this week. And if we see any buys, it is after. You see, we were talking about the futures and the options uh, mature. So after maturity, if you want to buy anything, I think that's the best time. So what I think we will experience a lot of buying this week and come early next week, so that you can be very prepared for the coming month, because it beats logic that you will go another month without anything on your portfolio because you're rebalancing. And rebalancing doesn't really mean going flat. Actually, it is almost it ni kama huwa happen you never go flat. There is always some exposure in the market, and exposure happens when you're revising and when you're relieving something which is not doing good or taking profit. So if you have to take profit and rebalance, it's now. So yes, we might be seeing some sell off, but it's not that if you're holding something on your portfolio that you've gone to zero. So remember, it's just taking profit, or what we can call profit taking or partials. So especially in the tech field, it's partials, and then you buy in. So please, uh, rebalancing of a portfolio and appraising, uh, if it happens, it doesn't mean unaenda zero kabisa. It means you're just adding on or relieving some of the good, some of the good, and some of the bad, so that you can even out the edges. So uh, I think that's another angle to look at it, because I think Jesse has just told you his. And if I was to run the if I was running a fund right now, I think this is the best time, because they say if you see the blood on the streets, it's the best time to be entering the market. Why? Because actually we are experiencing a lot of discounts. If we can look at something like Nvidia after the, I think we saw price go way below the point of the point of the split. So I think the split was around here, and we are operating in and around the split the split price. So I think that's another discount to make a very good entry. That's why you can see right now prices, there are buyers here. The people, what I know about these zones, they are filled with emotions, and these emotions are they are pure fear and greed. And if if anything, we can see a lot of sell off, and the guys who are fearing are the guys who bought up here, and the market has just turned, and or here, and we have a memory of the train left the station without you, because you thought after the split price might do bad before getting good. So you missed out the chance, and now you have another chance to buy price after split, and you want in and you don't want anything else. So that's how I'm looking at it fundamentally, or psychologically, the trading psychology I have about price action. So potentially we might see price getting higher on most stocks, and like I said, and I want to go back to the Nasdaq, and maybe say something on the higher time frame, and maybe insist on the same point that also we're seeing price potentially doing. Uh, just retracing down, no indication of a serious sell-off because of any fundamental trigger. Because right now, what the stock market players are doing, they're ignoring the rates or any other talk in the market right now, because they're they are tired of waiting for the Fed to do something, and they have extra cash. Like I think Clement said, apart from buying the bonds and everything, they have extra cash to continue pumping the well-doing companies. So what I'm seeing here, I'm just seeing just any other consolidation, but uh, any other consolidation, but backing the portfolio rebalancing, which is definitely experienced. It is experienced towards the end of the quarter or monthly, but especially at the end of the quarter, especially at the maturity of the options and the futures trades. So this is just any other Monday for me. So not really any other Monday, but it is normal, nothing out of place, and we've seen this before in this market, in other markets. So uh, brace up. Musiogope. It's just any other thing, and I'm really looking forward to see some bullish price action, because nothing right now in the media rooms, in the news, that that points to the flashing of the market, because companies are doing good, and we expect earnings come next season. Earnings are starting next week. Hey, hey, what a time to be alive. I think we will have a lot of fun come next quarter, where we'll be playing the earnings from the day one. So hey, hey, buckle up, enjoy. Anyway, um, anyway, Jesse, what are you looking at on your end? Because I think we have less than 30 minutes towards the close of our show. Can I call it a show? Our stream today.
Whatever it is, man. Yeah, nothing much on my end. Like I said,
Okay.
yeah, gold still playing around with current resistance and not finding its way past it. So I'm guessing we are most likely going to close below resistance today, and maybe the major move is coming tomorrow, whether it is to the buy side or downside. But yeah, so that's it on gold. But interestingly enough, once we came up to that point, we have rejected that resistance twice, twice on the hourly. The first time we came up to it, touched it, and rejected heavily. Second time, touched it, rejected. But now we are still pushing towards it again, meaning that gold just really wants to test that resistance. I think the bulls can't believe that they're not getting past that level today. But anyway, yeah, it will be significant because on the 1 hour, if we break it, it will be on the second attempt. Sorry, on the third attempt actually, because we had one again here at 11 a.m. I think during London, we came and touched it, rejected. During New York, we've come up, rejected, again rejected for the second time. And the more we test it, the more you're likely to break it. This is why I have a very bullish outlook on this metal. As always, as I've always been, as long as, and I will repeat this for anyone who has not been here from last week, as long as we are holding the yellow line for the yellow metal, and that is the 2290 to 2300 level, and that for me counts as very strong support. Therefore, I don't know who put the yellow line on the yellow metal. It's just there. Some things just happen. So anyway, yeah. So yeah, very significant support level there. And as long as you're holding above it, I think the Bulls still have a chance to bring this up to the all-time highs at 24,
Question,
28.
question, Jesse.
Okay.
Okay, finish there, then I ask a question. When you're done, just tell me.
Just ask. Just ask. I am ready to answer any questions. And by the way, if
Okay,
you're like Walter and you have a question, just tweet us and we respond.
yeah, sure. We are always here, ready to engage with you guys. So if you're there on YouTube, just comment. If you're there on Twitter, just comment. We engage. Ask questions.
In
Tell us
fact,
to look at
in fact,
any
something.
any market,
Eh?
any
In,
ticker you want to see. In fact, come again.
in fact, something interesting, very interesting happened.
Hmm.
Yeah. So I was
What
loading
up?
up electricity yesterday. I was loading up electricity yesterday, and no matter the number of times I kept keying in that number, guess what it was telling me?
Hmm.
It was telling me reject. Every time I
Uh,
input
uh,
the tokens number, it's telling me reject. Every time I input the tokens number, it's
reject.
telling me reject.
Well, well, I know what you're trying to do.
Anyway,
Anyway, I
Yeah,
was
ask the
asking. I just wanted feedback on. I think we had very different arguments when it comes to portfolio rebalancing, especially
okay.
the end discussions on how you expected the market to perform this week because
Yes.
it's the last week, and
Yes.
I just wanted to hear a comment on how I've said. I know we are experiencing the sell off, but I think this is the best time to buy when price is very discounted. If you know how to buy sell offs, and if you know
True.
how to
True.
DCA the dollar cost averaging.
True.
So, um,
True. True. And by the way, the thing,
just wanted you to see you echo that and
yeah,
then know where I'm standing.
yeah, it is true. The whole point of rebalancing is number one, if your stock is very high, then and you bought it very low, then you sell when it is high. That is the whole point. If the stock you're interested in is low and you're interested in that stock going forward, then what is the best strategy during the balancing? Buy when it is low, expecting that you will sell it when it is high. So again, that goes to you, that reinstates your point that if the market is down, if stocks like Nvidia are down, and by the way, Nvidia was at a point today 5.5% down, almost 6% down.
Six, actually,
If
it
at
was
all,
way above
yes.
six
So
percent.
if at all Nvidia is pulling back this much, then and you're looking at from your outlook, you see that the AI sector or the tech names are continuing to hold this market above, continuing to show their resilience in the market. Then at these low prices, this is when it is most ideal to be buying, because ideally you will be buying when the stock is low to sell when it is quite high. So during rebalancing and for this week, any name that will be down there, I'm expecting that start of next week you will see some buying pressure on this, especially the tech names I talked about when I was analyzing my outlook on quarter 3 and the rest of the year. Then for tech names, you might be expecting that although they are most likely pulling back at this moment, that guys are very keen to stack up, because generally tech names have been doing very well in 2024. Now, during rebalancing, and I'll echo what Walter has said, people don't sell everything on their portfolio. Let's say it's Nvidia. They will not be selling the whole of Nvidia. What they're generally trying to do, and the basic strategy that I would use if I was managing a fund, is let the performing names, the names which are doing quite well on the year, let them continue running. The ones which are not doing so great, well, think about offloading those and getting into the ones which are currently doing quite well. So I'm expecting that the rebalancing will cease, although we are seeing some sell-off in the market, which again, we talked about this again. The cheap names have been carrying the Nasdaq for a very long time. And if you're looking at Nvidia doing very badly on the day, then you expect the market is also doing quite badly on the day. So during rebalancing, I think Nvidia, which has been a very good name during the year, will continue being seen as a front runner, especially for tech names, and therefore people might be looking to add the exposure to Nvidia and other chip names for that matter. So again, although the market is pulling backward, and these are my sentiments, then we are approaching a level where it's very ideal for buyers to be getting into the market right now. And although I don't expect it to happen today or tomorrow, given that my general sentiment is that if anyone is going to be buying these names, it is most likely going to happen next week, because as I said,
Okay,
these guys don't jump on
however,
trades. Yeah, okay.
kindly let me just mention this because we are in the heat of the moment, and if you have to do anything like buy the low, there is no turning point where we say this is the low, now buy. You don't look at the pivot. You don't. There's nothing like investment at the sniper entry. That exists in the trading
Yes.
world, but in the investment world, what they do, they see if prices started going down. Let's say you have like you want to enter like a million. You split it in a couple of segments. Let's say you split it into four or split it into three, and enter while price is still going down. And the strategy is called dollar cost averaging. So that's how it goes. So
Oh,
CRT,
good
we
topic. Good
expect
topic for
after it
tomorrow.
goes
Good
down.
topic for tomorrow.
Come,
Good
come
topic
again?
for tomorrow. Good topic for tomorrow.
Uh, For
Dollar cost
buying while
averaging.
it goes down. Okay.
Yes.
Uh, we shall know. Tutajua because it depends with how and how the market is performing. I like to be very objective, like whatever we're looking at and how the market is playing and our topics we should be choosing according to what plays. So anyway, back to you. I think I've been cutting you up while talking too much today, but you just allow me.
In fact, I want you to give me 5 minutes or so to do something. Then I'll
Okay.
be back.
Okay. On my end, I'm actually looking at BlackRock, and you can remember the setup BlackRock, and BlackRock has just broken out, and this is what we're looking at. And going to the lower time frame, that's the 4 hour. And what we just want to do, we just want to see if it will be supported up there. And we just want to see a good print above, and we want to see sustainability, a good candle which can hold back there, up there, up above that counter trend line. We can already see a good candle and a volume based candle, and on the lower time frame, and we can see price trying to trace inside and do a retest on the lower time frame. So what does this mean for BlackRock? And if we go to the 4 hour, and we can estimate the opportunity there that lies in between this setup, and we estimate just like I estimate the trough volume or the height of the inside the setup, which gives us which we expect price to run from the breakout towards the 874s area. So you know how I think I do this each and every time, and almost on a daily basis in front of your faces. And if you're planning to enter this trade, this is the right time to enter this trade and average in. I still think price will go higher and possibly have a retest because just like what we've seen this time round, we can see price going. We can see price going up and down. The stock market is very volatile. Why? Because of the rebalancing which you were talking about. Because we can see price people getting in and out of the in and out of the. You can use this as a very good RR. Right now, I don't want to add any trades on my roster. Why? Because I think I'm very weighted in, and why am I weighted in? I think I have eight running trades right now, and they are being shared between 4 stocks. So I'm not really that heavy in, and that means I'm like 1% in on every trade, on every ticker. So it's not as heavy because if all doesn't go well because we put in risk management because of that, I'll be just losing 4%. But if all goes right, I'll be north of 8%. So you see what I mean, and that's what we do. So this is what I'm looking at, and possibly and hopefully, I hope price will do this. Price might be going up, and then maybe be supported by this, and I mean be resisted by this, and then maybe just break a little and then just go down, make a retest, and then start going up. And just like we said, price doesn't follow a straight line. So what happens is price will do. This is the normal price action that we always see in the stock markets, in all the markets actually. In anything price against time, that's what we expect. So uh, in other news, I think this is something very good, and I think I should be pulling this ticker up in my portfolio. I think it should be up with the rest. I think just below or just below Google. Just I think hapo katikati ya one of the what I call the mag 7. So apart from that, I just want to check the health of my trades, nothing else. And the stock market is trying to pull back up, and I was not stopped out because this here lies my stop out. so ikifika hapo hata nyinyi mjue nimetoka. Anyway, on the 15 minutes we see price pushing back up, and I want to insist on something. Why I can say when we experience rebalancing, we see a lot of volatility. Why? People are getting out, people are taking profit, and others are coming in. So price generally doesn't move as much. It moves around the same point and very aggressively around the same point. So that's why you see a lot of consolidation, especially since I think on Thursday we saw a lot of consolidation down here. So like I said, people are taking profit and reweighting their portfolios. So that's why you see a push high and a strong push high, then a strong push down, a strong push high, and a strong push down. So very welcome. It's very welcome price action. And if you can see, if you can look at Adobe still playing above my entry point and very healthy. I can't. I don't want to relieve my trade and. Even though it hasn't performed really well since the open on Thursday, it has been ranging around the same area. So we can look at the health of Softy and Softy. Uh, after it broke out after it broke out this counter trend line, it is now back down, supported by my entry, mashallah. Now back up, and I hope the price action plays above the counter trend line. So that's a hope, just a hope. But with the bullishness we seeing, we can see definitely some bulls coming back up, and now we can see Amazon supported in and around the area of breakout. And breakout, what do I mean by breakout? This is what I mean by breakout. It's the counter trend line, this counter trend line, which was broken out, I think, on Friday. And now you can see price pushing back up after testing the counter trend line. And yeah, something very good something good to see. Anyway, we're moving down, and and I want us to pick a ticker which we are not used to, and let's look at what Netflix is doing. What is Netflix doing right now? So Netflix it's just flashing, just like the rest, and I think Jesse is back. I don't want to give it to Jesse until he. Are you ready,
Yeah,
Jesse?
I am. Yep.
Okay, let me just go through Netflix, then I'll just give you the mic. And this is what I'm looking at Netflix, very bullish. And what I mean by after a series of bullish control, bull control, we can see a consolidation, and hopefully, I'd like to see such a. I want to see such I would like to see such a consolidation. So this is what we're experiencing right now, and we can see prices slowing down. And I want to show you how momentum works. We can see the rubber band man theory. We can see a lot of bulls, and then some sellers welcomed, and then these sellers push back price up because the sellers are very uh, key in attracting buyers. So buyers come in and then down again, then coming back up. Then they come with a bit of force, then push back. Bulls try to push back up. No, it doesn't. Yeah, then push back down. Anyway, what I mean, this is how you know momentum is bulls are losing momentum. Why? Because the retracements are getting bigger and bigger. You can see shallow. This is shallow. Then after another run, another bigger one, because this even ate up the bullish candle. It was a bullish candle, and you can see another one which was bigger actually, still ate up the bullish candle which had already printed before. And then we can see another trade, another another push up which was unable to break the higher high. And now we can see price flashing down, and on the lower time frame it can be clearly seen. And now we just expect, if price is strong enough to balance to be supported, and then see some sideways action if it is not much lower. And that doesn't always mean that's the point where price will be going, but we just want to see price going sideways and then just welcome another entry idea. So that's what is happening on Netflix. And then I think I'll just welcome Jesse. Jesse, come here, talk. I think talk about what you're seeing, and I think it's a quick because it's just something quick because we are ending this in like 8 minutes with a very good day because Tesla is going back up. So Jesse.
Yeah, thank you. A big shout out to everyone who joined us today. Quite a number of you. So thank you. And yeah, we always do this each and every day, Monday to Friday, at 3:30 p.m. All the way up to 6:30, because we also human and we have other activities to do. We wish we could be here until close, but unfortunately, maybe we'll work on that sometime later. But for now, very interesting looking at oil, that current resistance, we might be closing above any level that we have had since we broke out of 80. So maybe these are confirmation that energy names or energy names are quite strong. Looking at other energy names, the related one, Exxon is up 2.5%, which again, I had this, I think I planned this before, that we might be rebounding off this 108 level. And guess what? We are not yet, we are just engaged fifth gear on Exxon and other energy names as oil continues to push well above. Looking at the other energy name, which I have on my, let me look for it. Oh my God, I think it's somewhere hidden. Oh yeah, here it is, Oxy. We remember that there's a very big investor in this. And again, closing above, I talked about this level, which we, after consolidation, after breaking out of that daily channel, that bearish channel, with the stronger oil prices that we are seeing. Again, oil is being driven by number one, the expectations that supply is going to be cut at the end, starting at the end of this month. So what the markets are pricing in is that we are going to see accelerated demand as the US economy moves into summer, where there will be great demand for oil, and also the oncoming or the incoming or the planned cuts on supply but from the OPEC countries. So again, Oxy on the way up, engaging fifth gear, Exxon on the same path. So if you're looking for exposure in energy names, maybe this is high time that you look for exposure in energy names if you're out there and you're interested in trading energy names. The leading ones on my chart are Oxy and Exxon Mobiles for Exxon Mobile for anyone looking for exposure in energy names. It's high time that you maybe look for a position in oil names because oil prices are poised to go even higher than the current levels. Right now, we might be closing above that resistance point that I had marked out. And for clarity's sake, let us look at the 4 hour, and maybe it is more clear on the 4 hour. Yeah, we had this kind of choppiness here where we had all this kind of a resistance point being formed. It was support at this area, but for us in the current situation, it was acting as resistance, and we are kind of breaking above it. This will be the first close. If you close at the current prices on oil, it will be the first close that we have above the 81 level. So it's very interesting for oil. After we bounced off, we broke 80, came and bounced off today, and now we're making moves higher than 81. We are, in fact, we are 82.107. So very interesting for oil. I think we are yet to see higher prices. As I indicated before, my current target is the 84 area, the 84 region. As Walter talked about, it is not a specific point. It is a region. So my region is the 84 region, starting with 84 flat towards 84.5. So that is my immediate target for oil. For anyone looking for exposure in oil, maybe this is a high time you look for exposure in that name. So I guess we are almost closing the stream and looking at others for commodities. I know you're waiting for an update. Gold still rejecting current resistance, and we might see ourselves closing the day lower or below that resistance point. And again, the big moves are likely to come tomorrow because given today is Monday, everyone is hangovered. They don't want to expose themselves too much to the volatility. But to come tomorrow, we might be seeing things change, and we might be seeing Even we might the bulls might officially announce their arrival after the sell-off we've been seeing in recent times. So again, good looking out. Looking for again bullish position, and in the crypto world, we just tested that kind of support zones that we have right now after a huge sell-off coming off the 70,000 or 71,000 region. Remember, we broke out of consolidation. We are heading downwards, and today everything is quite red on the name on the crypto front. Again, I'm not a huge crypto trader. Therefore, I think we might be having one crypto trader coming in maybe sometime soon, but we will see how things pan out because I know we don't want to leave anyone behind. And for the crypto bros, yeah, we are planning something for you. So for oil, very good looking quite bullish as we wait for supply cuts from the OPEC countries. Remember, these are the oil exporting countries. They are planning to cut their supply of oil starting from this coming end of month towards September. So those quotas are scheduled for the start of next month until September. So looking out for those supply cuts as demand increases, therefore prices might be looking up and up. Current targets at 84 region. So as we wind up, Walter, just a big thank you for everyone who joined us today. Remember, we do this every day, Monday to Friday. And remember, the hashtag is hashtag TTKE. Follow the community page that is at Top Traders Kenya. It is running down on the scroll. If you check the stream, you'll see the handle there. Go to the handle, and you'll be getting updates on what is going on with the traders competition. And yeah, I think someone is bagging the $500 this month. Maybe if you're not
Yeah.
really to the party, just the competition, and you might be the one who will be giving that $500 come the end of the month. So yeah, that is it. And yeah, thank you for joining us, and continue doing so for the rest of the month as we close, and also for the coming month. We will here with Volta. We're looking at analyzing the markets together, the dynamics as we get into earnings season or reports coming month, and also the start of quarter three. So for me, it's cheers everyone, and yeah, see you on the webs. See you here tomorrow at 3:30. Yeah, and I hope you'll be joining us. If you'll not be engaged somewhere else, which we will understand. So goodbye, and see you here tomorrow.
Okay. First things first, I have an announcement that tomorrow, Tuesday and Thursday, we won't be holding any stream in support of the ongoing movement, and we support the cause because everybody wants to see a better Kenya. So, other than that, I don't think I have much. We're still there, trying to push back up, trying to push back down. I've told you why this is happening because we can see a lot of sellers, not really sellers, the profit taking, and we can see people who want to take advantage of that. So for every selling, we can see buyers ready to give me. If you're selling, how much are you selling? Give me this price. You're selling, give me this price. So we can see a lot of volatility, which I think will be going on for the entire week. So without much, I'll just say thank you. Thank you for joining the 110 of you. Thank you. And see you on Wednesday. Be safe. Be safe.